This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Are these stocks under-owned by institutional Wall Street?
A lot of these companies talking about generative AI.
With Lisa Mateo on markets.
Investors just worried about the ongoing sales slump in China.
And Michael Barr with news.
A ship traveling through the southern Red Sea has been attacked.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Your inflation report. We go to Lisa Mateo right away here on Inflation Wednesday. Lisa, how about that pound of hamburger?
It's getting more expensive. Everything is getting more expensive.
It used to be an afterthought, and all of a sudden I'm looking at the hamburger going, really?
You got to go turkey burger, maybe.
I love it, or chicken burger.
That's
I
what
hate
you
it.
got to
You
do.
like turkey? No. We say yes to all of you across America here on a really important CPI day. Let's start with a why. Paul, why is today so important for you?
Well, I think the Federal Reserve is going to really take a look at the data today and the data tomorrow from the PPI, just getting a sense of where this inflation is. When can they start cutting rates, Tom? I think a lot of folks in the market have been pushing it back. So we'll get some more data today and tomorrow.
We start strong here in a moment. Jim Bianco will be with us. He has led the charge on a resilient inflation. Really honored and well-timed to have Jim Bianco with us. We welcome all of you on Apple CarPlay, on YouTube. Shira Ovide and the Washington Post.
Huge.
Cover the Post. I'll get it out, folks. Shira Ovide used to darken the door of our studios.
Yes.
She's too big for us now. But Shira with a huge article on the impact of YouTube.
Yeah, I mean, yeah, it's, you know, we know it, Tom.
Is it streaming? Do you consider YouTube streaming?
It can be, but I mean, they have some streaming stuff, but they've got a ton of user-generated content, which means for Google, the content is free. They don't have to pay for it.
We're free.
You and I upload
Whoa. We're free?
Yes.
We're free. I thought we were getting,
Unless you want to subscribe.
No wonder we're eating a hamburger on CPI Day. We're on YouTube. Search Bloomberg Podcasts. We're out there. We're thrilled with the growth. I'll get out on live chat here in a moment. Bloomberg Originals, Apple TV Plus, Fire TV, Samsung TV. That's what VetBill watches. We welcome all of you again across the nation. The Interactive Broker Studio, a great lineup. We'll tell you about it through the 7 o'clock hour with your Bloomberg Business Flash, Lisa Mateo.
Your dog is watching TV? I'm so confused.
Oh, yeah, loves it. Samsung only. That's his.
There you go. Who knew? Good morning, everyone. Well, futures right now, little change, and this is after closing mixed in Tuesday trading. Investors still cautious ahead of today's CPI report. 8:30 Wall Street time. We will have all the latest for you. But that could give some insight as to how the Fed will navigate those interest rates. We have Atlanta Fed President Raphael Bostic sticking with his prediction that interest rates will be cut just once this year. He does tell Yahoo Finance that his view could change if the economic picture shifts. We'll see. Also out today, minutes from the last Fed meeting. We go to the 2-year yield at 4.74%. That's little change. The 10-year yield at 4.36%. And that is little changed as well. To earnings, Delta up more than 4%. Second quarter profit expects revenue to top Wall Street's expectations. More corporations stepping up travel. They say leisure demand holding steady. That's pushing other airlines higher. We have United up 3%, American up nearly 3% right now. And then sticking with airlines, the planes they use, Boeing, those shares little change. The FAA investigating a whistleblower complaint that Boeing took shortcuts to ease production bottlenecks on that 787 Dreamliner. The company says the claims are inaccurate. And finally, Taiwan semiconductor manufacturing, ADRs up nearly 1%. Quarterly sales grew at the fastest pace since 2022. That is your Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, thank you so much. Right to it. Joining us now, the most important voice on a resilient inflation. Jim Bianco joins from Chicago this morning. Jim Bianco, good morning to you. I look at your call of a number of quarters ago where you said, you know what? The disinflation path really is not going to get in place. Let's begin there. Is there a vector in place of disinflation or not?
I think that vector is largely ended, and that we are finding kind of the low in inflation, or to use the Wall Street parlance, the last mile has already been walked, and that we're probably in a 3% to 3.5% inflation world, and looking for inflation to go to 2% is a little bit much at this point. And I suspect that the data that we're going to see this morning is going to confirm that idea that we're probably seeing a bottom in inflation. And that's a problem for the Federal Reserve because they're committed to a 2% inflation. Right. And if we don't get to 3, I know it's for some people that sounds like a rounding error, but it's really not. That's going to really stall off the idea that there's going to be rate cuts.
Well, you know, what's important here, and I go to Lawrence Summers' good work with David Weston on Wall Street Week, he's making clear that they're going to have to come up from that 2% level to some form of level that Richard Clarett, Olivier Blanchard, and Jim Bianco have talked about. When is the Fed going to have to adjust up from the comfort of a 2% certitude?
Well, that's a good question because, in Fed parlance, they think that the neutral rate, the rate that neither stimulates or restrains the economy for the federal funds rate is 2.5 or around 2.5. And with the federal funds rate at around 5, they think they're very restrictive, to use a term that they like to use. Well, if that neutral funds rate, because of a 3% inflation world and some other factors, is really closer to 4%, like Larry Summers has been arguing, and I'm kind of in his camp, yeah, the Fed's restrictive, but they're not nearly as restrictive as they think. And that explains why stocks rally and the economy does well, even though these interest rates should be restraining the economy. And Chairman Powell was asked about that, and he's not ready to have that conversation about raising that neutral rate, but he should, because I think that that's really the important issue for the Fed right now. How much do they think they have to cut interest rates to kind of remove that restrictiveness? And if that neutral rate is coming up, the answer is not very much. And that might be a problem for Wall Street because there's an expectation once the Fed starts cutting rates, there will be lots of rate cuts this year. There'll be even more rate cuts next year. And interest rates will be very accommodative for things like the stock market.
So, Jim, this is an election year. How does politics play into maybe the timing of what Fed Chairman Jay Powell may want to do as it relates to interest rates?
I think you've got the idea right, timing. There's a phrase on Wall Street that the Fed is not partisan, meaning they don't sit around the table and figure out who's going to win and try and help that candidate. But they are political, and that the idea is the June meeting is becoming very important because the meeting after that is July 31st, and that's between the Democrat and Republican conventions. And that would not be a good time for them to change policy because they become part of the narrative. September 18th is the meeting after that.
Yep.
Then that becomes too close to the election. So it's kind of like June or bust when it comes to this rate cut. Otherwise, we're looking at the end of the year, like the November or December meeting, provided the data actually weakens enough to give them room. So I do think politics plays into it, even though the Fed will importantly say, no, it doesn't. It really does. At least they don't want to be part of the narrative.
Hey, Jim, is there a scenario where the Fed doesn't do anything in calendar year 24?
Sure. If the data, look, let's be honest. The only reason we're talking about rate cuts is because Jay Powell has said he's going to cut rates this year. But if you remove that from the equation and say, here's the data, here's what the markets have done, you would conclude there's no reason to cut rates. The market can handle this level of rates. The economy can handle this level of rates just fine. But we're only talking about it because the Fed said that they're going to do it. So the scenario that there's no rate cut is that the economy continues on the path that we've seen for the last several months, and it doesn't really give them a justification to do it.
You know, I looked Jim Bianco at this debate, and folks, I really want to point this out. Bianco gets a massive victory lap. How lonely he was saying the certitude of disinflation getting to the last mile wouldn't happen. Jim, all of this is wrapped up in the emotion of well-meaning, different political economists, let's spread between Paul Krugman and John Taylor of Stanford, who said efficacy of inflation is somewhere near 2.0%. How do we get used to a 3% inflation world?
Well, you know, you've hit the nail on the head because for 40 years until about 2020, you know, the 2% number was correct, and that's the environment that we were in. And it's really hard to get to the idea that the cycle turned in 2020 and that we are now in a different interest rate and a different inflation regime. And getting people to accept that idea. Look, we keep talking, you'll hear economists keep talking about we're going to return to a pre-pandemic level or the economy is normalizing. Normalizing from what? These are words that suggest that we're going to go back to a pre-2020 cycle, where I've been arguing and others have been arguing, no, the cycle turned in 2020. That massive shutdown restarted the economy, has long-lasting effects. And one of the long-lasting effects is it's changed the demand profile and it's changed the supply chains so that we have stickier inflation at around 3 to 4%, or 3 to 3.5% to be more specific, and that we have to start realizing that. And unfortunately, a lot of mainstream economists are not there yet. They still think that we're still in some last mile discussion that we're going to go back to a 2019 type of world where inflation is going to go back to 2% and interest rates can fall accordingly.
Very valuable. Jim Bianco, thank you so much for starting us strong on this incredibly important day. Of course, one of our value adds today is to bring a perspective on inflation. And Paul, I mean, if you have a 59th birthday party and the beverage of choice is a Corona Extra, you go to the 6-pack of Corona, 12 fluid ounces, $10.99.
No. 6-pack?
Whole Foods $10.99 for a 6-pack of Corona.
It's a 12-pack.
I thought it'd be like $7.99. Michael Barr, what do you say?
I'm all about the extra.
With our news in New York City, here's Michael Barr.
Thank you very much, Tom, Paul, Lisa. President Biden has more tough words for Israeli Prime Minister Benjamin Netanyahu after the attack that killed 7 aid workers.
I think what he's doing is a mistake. I don't agree with his approach. I think it's outrageous that those 3 vehicles were hit by drones and taken out on a highway where it wasn't like it was along the shore. It wasn't like there was a convoy moving there, etc.
The president spoke in an interview that aired last night on Univision. It was taped 2 days after the strike that killed the World Central Kitchen workers. Biden says Israel should agree to a 6 to 8 week ceasefire and work with other countries to allow aid into the region. Political fallout after Arizona Supreme Court upholds a near-total ban on abortions. The ruling hinges on an 1864 law written before women had the right to vote. The only exception is if a mother's life is in danger. Doctors could face up to 5 years in prison. Arizona's Democratic Governor Katie Hobbs urges voters to have the final say this fall.
To the people across Arizona who are concerned about the future of abortion rights in our state, who are worried about their bodily autonomy, who don't want to see the freedom of their wives, sisters, and daughters restricted, you can make your concerns known at the ballot box, and I encourage you to do so.
President Biden calls the ruling cruel. The law is set to take effect in 2 weeks. It's official. The women's NCAA championship game drew a bigger TV audience than the men's title game for the first time, with an average of 18.9 million viewers watching undefeated South Carolina beat Iowa and superstar Caitlin Clark. The Sunday game outdrew Monday's men's final between UConn and Purdue by, again, 4 million. The women's final was the second most watched non-Olympic women's sporting event on U.S. TV, trailing only the 2015 Women's World Cup final between the U.S. and Japan. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
We got to spend 5 minutes on this. I got 12 seconds. Paul Sweeney, is this just because of gambling?
No, I think I'm going to be interested to see how much of that was due to Caitlin Clark herself. Like, what will the ratings be next year? So that's what I'm going to be really interested in, to see how much of this was just women's basketball in general versus Caitlin Clark. I don't know.
We'll find something. What do you think, Rich? Help me out here. You think the ratings are going to come in? We'll have to see.
Where does the advertising dollars go? Probably to the men.
They all go. The advertising dollars all go to Bloomberg Business of Sports with Scarlett Fu, Michael Barr, and Damian Cesar. It is Inflation Day. We've got a great lineup for you to get to 8:30.
News 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures right now, little change. Investors are on inflation watch. CPI data comes out in about an hour from now. Meanwhile, we did get some housing data. Mortgage rates on the rise. According to the MBA, rates on a 30-year fixed mortgage last week topped 7% for the first time in a month. Home purchase applications fell by the most since mid-February. We'll take you over to the bond market. The 2-year yield at 4.74%. That's little change. The 10-year yield at 4.35%, and that is down about 1 basis point. To commodities we go. Spot gold lower at $2,345 an ounce, and over to oil. Brent crude is at $89 a barrel. NYMEX crude at $85 a barrel. Revenue surging at ByteDance. The owner of TikTok's profits soared about 60% in 2023. That's outpacing growth of rivals Tencent Holdings and also Alibaba. And we've been talking so much about inflation. Want to point this out. The price of Godiva chocolates going up. Its London-based parent company, Plattis Foods, it said it expects heights in the single digits. The reason? Yes, the cost of cocoa more than doubled since the beginning of the year. That is your Bloomberg Business Flash. Tom and Paul.
Thanks so much, Lisa. Greatly appreciate it. We've got a really eclectic group for you this morning to get to the 8:30 report. We'll go beneath the headline date at 8:30. We're thrilled that Ira Jersey will join us to get into the CPI report, first market reaction, and then just moments ago, Neil Dutta's people agreed that he could appear with us. So okay. Neil Dutta, who was my Economist of the Year in 2023, will be with us at about 8:32, 8:33. He's got to look at the data and report to Renaissance Macro people. This is an honor. And Paul, it's an honor because at the bottom of my bed in my bedroom is the carpet from my grandfather that he brought back from Tehran after meeting with the Shah a lifetime ago. And our next guest with wonderful insight on inflation and the global nature of it is someone steeped in the Iranian heritage and being so successful out of Brown University in New England as well. Sasan Garamani joins us here. I got a bunch of questions that are on, but why don't we?
Thank you,
I think
Tom.
He probably wants to talk about CPI this morning.
I don't know. Rug sounds pretty good too. But.
The rug is beautiful. Vet Bill's chewed on it. It's got the dog chews on it to show.
All right, Sasan Garamani joins us. He's the CEO and president of SGH Macro Advisors. Sasan, we were going to get a bunch of inflation data this week. What do you think how do you think the Fed is leaning right now as it kind of pours over what we're going to see today and tomorrow on the inflation prints?
Yeah, the big question, of course, is whether the January, February numbers were a bump in the road or something more durable. I think nobody expects inflation to remain at that pace. We know there were seasonal factors and all these other things. So it really has become a kind of a fine-tuning exercise. It's interesting. We're getting questions from clients on what does a 0.22 mean versus a 0.24 mean.
Come on. Are you in my camp? Paul thinks it's important. I'm like, this is absurd. Tenths of a percent.
It is. I think because the inflation forecasting business has boomed and you have some great forecasters, but people are very focused on sort of this bottom up analysis and looking at what's this month's used cars versus last month's and all this and to me I think the demand component is still very significant for inflationary pressures, and that's been kind of pushed to the sidelines by Powell in particular, and sort of the notion that GDP and growth and strong demand don't matter anymore, in large part because of immigration, of course, is the key factor that they're looking at there.
Paul, let me interrupt here. Torsten Slockout moments ago, his headline from Apollo, U.S. recession probability falling.
Good.
Maybe we saw that with the Delta airline earnings today.
Great point. Great to tie that in with Delta, Tom. And so, Sasan, I guess one of the issues here for a lot of folks is, a lot of folks we talk to, whether they're academics or they're market practitioners, they're saying, inflation's already whipped, basically. You need to start cutting now. Yeah. What do you say to those folks?
Yeah, well, it's interesting because I wear the hat. I follow the ECB very closely as well. And so you kind of look at these comparative dynamics, and it gives you a perspective kind of taking a step back. And in the Eurozone, and just to switch to that for a very quick moment, there's some very strong disinflationary forces. There's no question that a lot of the inflation was supply side, some was demand, but and so a big component, and I think people don't pay enough attention to this, is on the fiscal side, where in the Eurozone they're actually contracting, and they
love their austerity, don't they?
They love their austerity, and and part of it is of course they have much stricter budget guidelines, even though they don't always stick to it. In the U.S., here we're looking at 5.6%, deficit, and going up to 6.1, and so you can sort of parse. And so this is the whole question of the last mile and all of that. I think we have very different forces where we could easily get an undershoot in the Eurozone, and I think we are looking at a very likely upward. The Fed is fighting to keep that 2.6% PCE. There's all kinds of upside risk to that.
I have to ask you, with Iran being in the news, I just have to ask you, not so much the nuances of the international relations, maybe that's not your remit, but with your work with the Iranian American Political Action Committee and other efforts as well, is the Iranian middle class intact? The Persian distinction is a legitimate nation, a legitimate operative middle class, and indeed an upper middle class. Is it still in one piece?
Yeah, Tom, I think this is a key question, because everybody who has thought that the economic pressure would, create a lot more political instability in Iran has had that, dashed, and a lot of that is that, life goes on. I wouldn't say an upper middle. Well, there's definitely a lot of wealth inequality in Iran, which is really interesting, sort of like in the China story, between the haves and have-nots. But that said, I'd say there's a strong, lower middle class sort of base that's been there, a lot of subsidies, and so life goes on. It's the people travel back and forth, quite easily between. I don't, but
Do you have a model on what a barrel of oil is going to cost? Because Paul, the different conversations we've had. If demand comes on, particularly in the Pacific Rim, some people easily model over $100 a barrel. Are you in that camp?
I think I can see that, because you talk about demand in Asia. Of course, a big component of that is China, and I think they have, again, on the fiscal side, they've really opened up the floodgates. Not as much on monetary, but they're doing 3.8% spending 2 years in a row, which for China is huge. And so I think those kind of the demand pull is, and I'm not bearish on the U.S. economy, and I think so if you look at the demand component, I think it's going to continue to be strong. And on the supply side, there's, there was a time when, the Saudis and everybody would be looking at, sort of being the swing producer and stabilizing, and they're just trying to maximize their thing. The wild card is, the U.S. election, Trump, and sort of what happens in Russia, and whether we get a resolution of that.
Sasan, thank you so much. Sasan Garamani with us on this important
Thank you,
CPI
Tom.
day.
Thank
Some
you,
real
Paul.
perspective.
Appreciate it.
To say the least. For years with Medley and, of course, now SGH Macro advisors. Paul, we've got to be looking at inflation. And I mean, after the appearance yesterday of one Javier Blas, our extra virgin oil correspondent. First of all, the Seville olive oil is sold out at Whole Paycheck. But a basic bottle of Spanish olive oil, that used to be a $12 purchase.
Now
$15.29 for the basic Spanish olive oil. And some of these others are checking in. I mean, we can go there and get a flowery, the kind that Lisa would buy. The Garcia de la Cruz. It's named after the guy that plays for the Cincinnati Reds. $27.49 for a bottle of olive oil.
But Javier says you have to go Spanish.
He's all Spanish.
He's all in on this. I've always been the Italian extra olive. I don't know.
Seriously, these are all $2-3 higher than what I remember.
I'm looking at, and there is an index, the olive oil extra virgin EXM spot. There is an index for that, so go
it's higher.
Put that on your Bloomberg terminal, you'll find it.
Inflation news you can use. It's on YouTube. Search Bloomberg Podcasts on Apple CarPlay. Bloomberg Originals as well on Apple TV. Good morning.
Bloomberg Surveillance is brought to you by
Headlines and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Little movement in futures right now as investors stick in this wait-and-see approach ahead of a key inflation reading released in about an hour from now. Now, it will be the last CPI report before the Fed's May meeting. Over to the bond market, the 2-year yield at 4.73%. That's little change. The 10-year yield at 4.35%, and that's down about 1 basis point. To currencies, the dollar is weaker, Japanese yen weaker, euro, British pound stronger, Bitcoin is lower at 69,088. Companies making news, we'll start with Apple. They're up about 0.3%. India iPhone output hit $14 billion last fiscal year. Sources saying it now makes about 1 in 7 of their devices there in India. India also in the spotlight for Tesla. Tesla's up about 0.5% right now, reportedly in talks with Reliance about a possible joint venture to build an EV manufacturing facility in India. Now that's according to local reports there. And since we're talking Elon Musk Tesla, let's go over to his other company, Starlink. Sources are saying his satellite business is still burning through more cash than it brings in, despite his claims of profitability. They say at times lost hundreds of dollars on each of the millions of ground terminals that it ships. That is your Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, thanks so much. Lots coming up here, 1 hour away from really important CPI data. Ira Jersey will assist along with Neil Dutta to give you perspective there. And of course, huge market reaction, not anticipated, but possible is how I would put it. Anna Wong will come along in the 9 o'clock hour with Gino Martin Adams on the things Lisa Mateo has been talking about. Delta Airlines, better than good. Taiwan Semiconductor.
Yeah, Taiwan
better
Semiconductor.
Than good.
Well, chip business. Tom, I think you and I can make money in the chip business today. I mean, this whole AI thing.
I've never been able to make money in it.
Chips, yeah.
Intel's
trying to figure it out.
Intel's trying to figure it out. Will Ryan's laughing at me because he knows I could never do Greenwich chips. He's from Aberdeen, Scotland. Where's Aberdeen? Aberdeen is totally cool. Like now it's associated like oil, North Sea. You go to Edinburgh, and the flags there are always flat out because the wind is perpetually 40 miles an hour. And then you go north, and there's a school where the royalty goes, St. Andrews. And then you go norther. And like you're in Aberdeen, you're waving to Norway. I mean, you're so far up the East Coast. I mean, that's all there is to it. And what Will Ryan has done with Granite Shares is just extraordinary. It's about leveraging ETFs and gold and ETFs. And that's what we got to talk about today. Is gold up because of inflation?
I think a little bit about inflation, clearly, but at the moment, I would say it's more because of demand, and we've got demand.
And China's the angle.
Demand from China, demand from central banks around the world that are buying gold at record pace. And I think part of that is because this idea that the Chinese yuan, certainly as the world's second reserve currency, is sort of losing a bit of its status. Right. And so perhaps gold is actually stepping up into that role.
7.23 yuan per dollar today. What are you actually seeing in retail flows in gold? Are we gold bugs?
I think right now we have to be gold bugs. At gold, another all-time high. Costco, as I'm sure people are well aware, a lot of hype around this story that are selling 1 ounce gold bars at their stores and purportedly doing somewhere in the region of $100 to $200 million a month in sales. And so gold clearly is back in the headlines, back, very much in the sights of investors looking for, that yellow metal as a hedge to everything going on.
I mean, I know it's a commodity, it's supply and demand, but is there any valuation analysis of gold? Where should it be? I mean, I know there's no multiple of earnings or anything like that, but it just feels like, boy, it's had such a run. Do we feel like, does anybody make a call that it's overvalued or there's still room to go?
Yeah, I mean, Paul, people, like any asset, people make a call as to whether it's undervalued or overvalued on a daily basis. And I think with most commodities, it's not like a stock where you have a stream of incomes generated that you can apply some kind of formula to and say, okay, well, based upon my model, the value should be this. But let's be honest, if we could do that with stocks, then we probably wouldn't be here today. We'd all be on an island somewhere.
Right. What are you seeing on leverage? I mean, Granite's you're iconic on leverage. Do we have an appetite for leverage right now?
Definitely. I mean, the market is just incredibly buoyant, as you were just talking about with the chip stocks. You've seen huge demand for NVIDIA. That's probably not a surprise to anybody. Our NVDL, which is the 2 times leverage, NVIDIA, very big. We just launched an AMD as well, AMDL, 2 times AMD. So that the AI story, and I should say crypto within that as well, Coinbase, CONL, which is the 2 times Coinbase.
You have a 2
Huge
times
demand.
Coinbase.
Yeah, you got to be in that, Tom.
You could be 2 times Lisa Mateo. You
Yeah.
know, just to, do a Mateo ETF. I find the leverage thing we make jokes about it here. Of course, the triple leveraged all cash fund's killing it with the money market flows over the last number of weeks. But what are we doing with our money? I mean, you have a window and you're small enough. It's not like Schwab where there's a million windows. You've got a window or prism into what we're doing. What are we doing?
What we're doing, Tom, is the vast majority, and I think this is increasingly the case, are going more and more self-directed. So in other words, people are taking control of their own finances in a way that's never been possible
I see that
before.
In my family.
And
full disclosure.
The access to markets has gotten a lot easier through trading apps, investment apps, robo-advice services, and people are doing more with their own money.
It's the nature of a bull market, but Paul, what I see right now is a restudy of the classic phrase, part of a carefully balanced or carefully managed portfolio.
Exactly.
That is under threat right now. It's a bull market.
Will, what are you seeing in terms of just flows into your complex of ETFs? I mean, it's just, when Tom and I came up in business, there were no ETFs. It was all the mutual funds. We ran around Boston seeing all the mutual funds. Now it's ETFs. Where are you seeing the flows these days?
The flows for us are really skewed massively at the moment to the leveraged products, both long and short, but particularly in the AI names and crypto names. Wow. We are seeing a little bit on the commodity side, but not as much as you would think, given where prices are and given the move. Gold's outperforming the S&P 500 so far this year, which a lot of people probably would think is very surprising. But we haven't seen the flows in the gold ETFs the way that we've seen on the stock side.
Really? Interesting. I'm looking at the Barr, the Granite Shares Gold Trust, up just about 14% year to date. Who's buying ETFs today? I mean, on the ETF space, how much is institutional versus retail, do you think, in terms of trading?
So the vast majority has historically been institutional.
Really? Okay.
But that, again, is all changing based upon this idea that people are taking more and more control of their own finances. So I would say now, although it's very, very difficult to measure these things because we don't have a direct relationship with the customer, that more of this is increasingly retail.
What's going to be, Emily Grafeo in the team here, Katie Greifeld helping out, have just done a huge thing about smaller ETF companies are battling with the distributors over who's going to pay what for what. Are ETFs still going to be free 5 years from now? Or is it so dominant, somebody's going to have to take a piece or a commission out of it just to survive?
Here's the problem, Tom, that historically the market has been dominated by mutual funds on one hand and their distributors on the other hand. And mutual funds have always paid for that distribution. So the challenge that distributors have and mutual fund companies is they're seeing assets hemorrhaging through the rise of ETFs. The distributors are seeing revenues hemorrhaging because of the switch to ETFs, and they're trying to fill their pockets or supplant that revenue stream. So I 100% hope that we still have commission-free ETFs in a few years, and I think that there are plenty of players in the market that will, frankly, revel in this because they will want to try and use it as an opportunity to take market share from the incumbents.
Will, thank you. We'll run with this with Granite.
And Tom, next time you and I do a remote from London, where we have to go. Will's pitching me on this Both.
Oh, Both, it's great.
We need to go.
I bet it was so good I can go again.
I mean, it's a short train ride. I think we can do a remote broadcast.
We can do a remote right from the pool.
Yep.
Lisa can go and do laps.
Yep.
And, they have the Roman Bath in Bath. And they have a beautiful church.
I know.
Couldn't even get in. The line was so long we couldn't get in. But and it's a lovely train ride.
Yeah, I think we need.
It's like past Heathrow and then out. Everything's gauged when you're an amateur like I am. Everything's based on Heathrow. It's like 3 Heathrows.
Okay.
From London.
All right, I'll put a ticket in. See
Will Ryan's going. I'm never coming back here again. Will Ryan with the University of Aberdeen. Thank you so much this morning. We got to reset here, folks. We're less than an hour away from this hugely important CPI report. Let us explain, Paul, why 8:30 this morning is important. We've had a couple of months of less than disinflation, a higher inflation. And what you do is you look at the curve of very few data points, and it's enough to get people sweaty. We heard from Jim Bianco where he feels like there's a real permanence to it. But the answer is, after a few months, and Paul, here's the key phrase, wrapped around the holidays in January, it's a little noisy. So one, it's data to get us beyond the noise. It's data to see if the Jim Bianco trend is in place. And critically, it's data off of car disinflation. Some legitimate food disinflation. We're making jokes about it.
No, it's big time.
But food and housing is a complete mystery.
Yes.
I mean, rents and
rents
mortgages
equivalent, all that kind of stuff. And the mortgage rate, Tom, now above 7% again.
The blended rate, I haven't even looked at the bank rate 30 today. We'll give you that in a moment here, but it's really extraordinary. Lift to the market, futures up 6. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. The Arizona Supreme Court has delivered a landmark decision in giving the go-ahead to enforce a long-dormant law that bans nearly all abortions. The law places the politics of abortion access front and center in a battleground state for the 2024 presidential election and Senate control. Frustrated Democratic Arizona State Senator Eva Birch told reporters that she had an abortion a few weeks ago for a baby she very much wanted.
Somebody gave me a procedure so that I wouldn't have to experience another miscarriage, the pain, the mess, the discomfort. And now we're talking about whether or not we should put that doctor in jail.
The law is set to take place in 2 weeks. 2 weeks after the collapse of the Francis Scott Key Bridge in Baltimore, officials are setting the ambitious goal of reopening the entire port of Baltimore by the end of next month. Today, federal officials from Transportation, the Coast Guard, and the Army Corps of Engineers are expected to brief the House Transportation and Infrastructure Committee. Bloomberg's Amy Morris has the latest from Washington.
Closing the port of Baltimore has choked off exports of coal, with flows expected to plunge 35% this month. And while officials are pressing for the federal government to help foot the bill to rebuild and reopen, Maryland Senator Ben Cardin says the cost is still hard to pin down.
It depends on the design of the bridge, the modern technologies. There's been a 3,000% increase the amount of cargo that since when this bridge was constructed.
Cardin did note that federal money did pay for the Minnesota bridge replacement, and any insurance and penalty payments in this case can reimburse the taxpayers. In Washington, Amy Morris, Bloomberg Radio.
President Joe Biden says Israeli Prime Minister Benjamin Netanyahu's approach to the war against Hamas is mistaken. Biden's remarks deepen an already growing rift between the two allies over the war now in its 7th month. Global news 24 hours a day and whenever you want it with the Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Opening day update. It wasn't as exciting as the eclipse. Red Sox came out. Tyler launched one, broke a window just to the left of the cask and flag and put the ball over the left field wall, broke a window of a car. And that was it. The Red Sox 2-hit.
Yep.
Mr. Burns, better than good for the dreaded Baltimore Orioles. We're going to be talking a lot more about the Baltimore Orioles. What do you think, Michael Barr?
Yes, we are.
We are. Your badge is orange, Michael. I see that.
By the way, the Tigers won. Good for them. And I'm sorry about your 7-1 loss to the Orioles.
Yes, we did. But we're going to be talking a lot more about the Orioles is what we're going to do. We say good morning to David Rubenstein, a native of Baltimore who saw his first opening day as principal owner of the freshly minted in Camden Yards.
Great
Historic
ballpark.
Park.
That's standing the test of time like you can't imagine.
Is that enough Orioles talk for this morning?
We're good there.
Thank you. We checked that box. It's CPI in 45 minutes. Really a key economic report. Ira Jersey and Neil Dutta will help us out with review of that key inflation data. On Apple CarPlay, on YouTube, search Bloomberg Podcast. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures, right now, a little change, but we have NASDAQ, Dow, and S&P futures. They're all up about 0.1% right now. This is as investors are on inflation watch. Yes, meanwhile, we did get some housing data. I want to point that out. Mortgage rates on the rise. According to the MBA, rates on a 30-year fixed mortgage last week topped 7% for the first time in a month. We'll take you over to the bond market now. The 2-year yield at 4.73%. That's down about a basis point. The 10-year yield at 4.34%, and that's down about 1 basis point as well. Over to commodities, spot gold lower, $2,349 an ounce, and oil, we have Brent crude at $89 a barrel. Revenue surging at ByteDance. Sources saying profit jumped about 60% last year. That's outpacing its rivals like Tencent and Alibaba. And since we've been talking so much about inflation lately, get ready to pay more for stamps. The Postal Service asking the Postal Regulatory Commission to approve a 5-cent hike in the price of stamp. Okay, so that would bring it up to 73 cents.
73 cents.
73 cents per stamp. Did you know that?
They get you with the forever stamp?
Yes.
Yes.
I have forever stamps from when Nixon was president.
Who buys stamps these days?
I got to mail out those Christmas cards.
I love
telling
stamps. Stamp 73 cents.
It would bring it up to 73 cents.
All right.
Inflation.
I had no idea. Wow.
Yeah.
She's so good.
I don't know where
I
she gets
learn
this up.
every day from Lisa Mateo. I learn. She said to me today, do more Orioles baseball. I learn every day. We're away from the CPI report in 4 minutes. We say good morning. Paul Sweeney and Tom Keene here on inflation. To me, it's housing, which is OER in rent.
Yep.
And they're all fiction. And I think what the pros are telling me is multifamily coming on with evention, and at least will subside inflation.
Yes, I mean, they're building like crazy out there, multifamily housing everywhere you look.
Yeah.
It seems like they're building that kind of stuff. And then they say you need it because nobody's leaving their existing homes.
Oh, we're going to have to get to it. I mean, the future's up 7, the VIX 15.08.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines from major publications.
The Lisa Mateo Report is brought to you by Interactive Brokers, their bond marketplace. Access their vast selection of over 1 million global fixed income securities, no markups or built-in spreads, low transparent commissions. Learn more at ibkr.com/bonds. Lisa Mateo, there was almost too many choices this morning.
There's a lot going on. There were some good stories. This one, I have to ask you guys a question. If you're traveling on a plane, have you ever been asked to change your seat?
Sure.
You have?
Yeah, and this is the way I think about it. When having 4 kids traveling back and forth to San Francisco for 25 years, many times we asked people to kind of help us out and switch seats so we could be together. So now I'm on the flip side of that. And I try to be as accommodating as I can. But if somebody asked me to move from my aisle seat, which is my preference, to like a middle seat, not happening. I don't care.
Even if there's kids involved.
Here is somebody in economy who has an aisle seat often is paying extra for it.
And
that's the nuance.
This is the problem, because people are paying extra for seats now, right? Passengers are paying more for seats, and then they don't want to pay more, so they just choose the option to just go wherever. But then when they get on the plane in the cabin, they're starting to ask other people, you know what? Let me switch with you.
I just sent Afterthought to Edinburgh. Okay,
sure,
it was outrageous. It was like, I thought it'd be $700 and it was $1,200-1,300. And one of the overlays was aisle seat or window seat.
Okay.
And the second overlay was oxygen. And I said, we'll pay up for oxygen as well. But is the answer people are being rude now and not saying?
It's the answer is that it's causing a lot of tension in the cabin, and there's so much tension in travel to begin with. So the Wall Street Journal has a really good look into this, because you have the passenger who's asking, and they're like looked at as like a cheapskate. Then you have the person sitting in the seat who's looked at like a jerk if they don't change the seat. And then you have the airline stewardesses who are caught in the middle, and they just want to sit there and say, not my problem. It's up to you guys. You battle it out. All right. Theater owners, they're saying that blockbusters are not enough to help them survive. They like the Barbenheimer, that whole trend of it, but they need more than 2 movies to survive.
Paul, start there. Is that a one-off? Was Barbenheimer like just one lovely summer?
No, I mean, there's a lot of stuff. 24 is going to be, the summer of 24 is going to be okay. 25 and 26 are going to be blockbuster.
Continually.
Yeah, no, and it's a problem because you've had big hits like Barb and but then you had the sleeper hits. You had the Five Nights at Freddy's. You've had that one.
Five Nights. I love that.
You didn't see the Five Nights at Freddy's? I saw that one. But it made so much money. It was a sleeper hit. Then you have the Taylor Swift, the Beyonce concert films trying to pump in money. But then you have the Hollywood strikes. Also that hurt. You have competition from streaming, and that's another issue that the theaters are dealing with. So we'll see where it goes.
But do we still have movies that do like 100 million?
Yes.
Yes.
Yeah.
They're still blockbusters.
Sure.
Yeah. Well, a blockbuster today really has to be like $1 billion global.
Yeah.
Global.
And it's tough. The superhero ones, not as much of a moneymaker as they used to be.
Interesting. I haven't been to the theater since time began.
Oh no!
I mean, it's
There's
just
some great theaters.
Go
in Manhattan.
support.
Manhattan's got some great big old theaters with great
what
stuff.
I remember, I know we got to continue here, but I remember when the kids went all the time.
Yes.
And then one day they just stopped, and it was because of streaming and Netflix.
Yep.
They just stopped going.
It's more convenient.
Next, what do you got?
Track and field. This one interesting from the Associated Press.
For me, right? With all the track and field I'm doing.
Track and field is going to become the first sport to introduce prize money at the Olympics. So World Athletics, they're the governing body of athletics. They say they're going to pay $50,000 to gold medalists in Paris. It comes from this big pot of $2.4 million they're setting aside to pay them. There's 48 events in track and field, so that's how it's going to break down. If you're on a relay team, you have to break up the $50,000, but it's the start of something new, paying these athletes who win the top gold.
If they were amateur, isn't that break the whole amateur thing?
Correct, but need a little cashish, to go along with it.
All right, all right.
And there's more to come. They're actually thinking of payments for silver and bronze medalists. They're planning to start from the 2028 Olympics in Los Angeles.
Wow. I mean, to me, I've been reading Le Monde English. I really recommended folks the Le Monde, the great French newspaper, and they have a very inexpensive all-English site, which I find fascinating. And of course, there's no other debate. Are they going to get in the river and swim?
Oof.
So what do? Got to pay somebody $10,000 to get in the river? It's not pretty.
No.
I mean, it's not. At some point, as we get closer, we'll get.
But you've got the suite all set up in Paris for the Olympics.
We
right?
do.
Okay.
We're on the back side, away from the street,
Okay.
and we're looking out on they got the cigar, garden, the jardin.
Sure.
Jardin.
The jardin.
Okay.
Olivia V or X or whatever, Jardin Cigar Bar.
All right.
But, we're
be all set up for the summer. Good.
Greifeld's going to be out with Gus and the horses.
Yep.
She's taking Gus the horse, and they're hanging out. I think it's out by Versailles. It's going to be very exciting. Next.
Finally, we don't want to hear this on the early morning shift when we come in, but decaf becoming the hottest thing in coffee right now. You have alcohol-free cocktails, you have meat-free hamburgers, so now decaf is becoming the new thing. The reason why is because new techniques in caffeine removal, they've started without using chemicals, so it's becoming a little bit healthier, I guess, for decaf.
I wonder what percentage people drink caffeinated coffee versus decaf. I don't know the percentage there.
It's not, but it's becoming this high thing because there's different competitions, like these high-class competitions, and decaf was actually won a top prize for the first time in this competition's 20-year history. So it's starting to pick up a little bit.
You guys, the Tang here, and folks, I've been using Tang Zero. The sugar became a problem, and Tang Zero is great. But you guys deserve to walk by the decaf excellence of Senka.
Oh,
Senka.
Senka was the sight to behold.
The instant coffee, too?
Yeah.
I assume Senka is still around. Lisa, thanks so much. Great. That is Lisa Mateo with the newspapers. Paul, did you have a coffee house? My mother left cups of coffee all through the house. We would find one 3 weeks later with mold on it.
What I find interesting is you go to a restaurant and you see some of I'm 60, but people older than me, their main drink when they sit down is coffee.
Yeah.
Not water, soda, juice. It's
very
coffee.
impolite, and I'm one of them.
I think my generation was the first one to say, we don't do that. I mean, I'll get coffee after a meal or something.
After the meal. After the dessert. Yeah.
I got the espresso last night after my meal at Fiorino's in New Jersey.
Fiorino's, awesome. Nice.
Yeah, great espresso. But I don't sit down, that's your main drink. I don't get it. How does that quench a thirst or wash down food? But anyway, that's just a different generation.
That's the way we roll here.
Yeah.
I mean, with Pharaoh, I had to drink the brown swill, tea. And,
exactly.
we'd go out and, we'd be forced to we'd be forced to do tea. How do you get started on CPI day? She doesn't care about the CPI report. Taylor Swift, you belong with me.
All right, coming up in the next hour, I have no idea who's going to be here. We've had so many changes to our schedule.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Apple's still minting more money than God, right?
Geopolitics front and center for global Wall Street.
With Lisa Mateo on markets.
Stocks are coming off of another record high.
And Michael Barr with news.
U.S. Secretary of State discussed the conflict in Gaza.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. It is a CPI report in 30 minutes. We're going to lead strong there. Ira Jersey scheduled into it with market reaction. The Neil Dutta scheduled to be with us. We have Constance Hunter at the top.
Yes,
right?
that's good. That's
really strong. 45 minutes to get you into the key economic data. Some would say, Paul, I'm going to go there. This is more important than the jobs report, which was bang up boom, wasn't it?
Bang up boom. And I mean, we saw some heightened inflation there, remember, Tom, in January and February. So a lot of folks are trying to get a sense of, is that a little blip here? Or do we have a real acceleration in
You want some inflation?
Yeah.
Islanders Rangers, section VIP 11W, row AA. I mean, that's the kind of seat I'd sit in.
Yeah.
I'm
a little bit closer.
You're a little close to the glass. $4,600 a seat. That's inflation.
That's Rich Truman kind of.
Wow, that's like, that's a Truman. Truman's like 3 seats over from that. Bloomberg Surveillance with his CPI report. And for the next 2 hours, brought to you by Cohn Resnick Advisory Assurance Tax. Cohn Resnick can help your business quantify its financial exposure using risk-based strategies and analytics. Visit CohnResnick.com. We're on Apple CarPlay. We're out on YouTube. Search Bloomberg Podcast. Lovely Lisa Mateo leading the visage.
Yep.
Sweeney looking cut and chiseled, I should say, as well. Look for us out at YouTube, Bloomberg Podcast. And then, of course, you can move on to the live chat. The key point in the live chat this morning, Sanka got the biggest response. We'll look at the inflation report on Sanka here in a moment. From the Interactive Broker Studios with our Bloomberg Business Flash, Lisa Mateo.
Good morning. We have a slight lift to the market right now. We have NASDAQ S&P futures up about 0.1%. Dow futures up about 0.2%. Investors still cautious. We have today's CPI report comes out in about a half hour from now. That could give some insight as to how the Fed will navigate interest rates. Now, speaking of which, Atlanta Fed President Raphael Bostic sticking with his prediction that interest rates will be cut just once this year. He does tell Yahoo Finance that his view could change if the economic picture starts to shift a bit. Also out today, minutes from the last Fed meeting. Over to the bond market, the 2-year yield at 4.73%. That's down about a basis point. The 10-year yield at 4.34%, and that's down about 1 basis point. To earnings we go. We start with Delta up more than 4%. Expect second quarter profit and revenue to top Wall Street's expectations, and that's actually pushing up other airlines higher. We have United up 4%, American up nearly 3% right now, and then we'll stick with the airlines and the planes they use. We're talking about Boeing. Their shares little change. The FAA investigating a whistleblower complaint that Boeing took shortcuts to ease production bottlenecks on that 787 Dreamliner. And finally, ending with tech, Taiwan semiconductor manufacturing, ADR is up 1%. Quarterly sales grew the fastest pace since 2022. Full earnings report due next week. That is your Bloomberg Business Flash. Tom and Paul.
Well done, Lisa. And what's important there, folks, is this is a Teen Sweeney's pre-release. They do it differently. Like JP Morgan on, 2 days we get JP Morgan?
Yep.
It's a massive 48-page power. It's almost as long as Jamie's annual report. Massive dump. Taiwan is like 3 numbers, and there's more to come, just as Lisa says. But to me, that was a huge deal.
That was. So we're going to get some inflation data today, Tom, which is going to be big on the consumer side today and on the producer side tomorrow.
And the inflation data, and Paul and I disagree. I think Constance Hunter is like with Paul, where she's looking at the month over month, 0.2 versus 0.3. I want to know what housing did. I want to parse it like a David Rosenberg. Kind of thing. Why don't you bring in Constance Hunter? Because she's wired to 0.2.
Wired into it, exactly. Constance Hunter, she's a senior advisor at Macro Policies Perspective. Constance, thanks so much for joining us here. I mean, a lot of folks were a little spooked by some of the inflation data we saw in January and February, a little bit hotter than people expected, and not so sure about that Fed pivot. What do you think we're going to see today?
Yeah, well, on that, I mean, a lot of people have been concerned that the last mile is sticky, right? And so when you get prints like we did in January, February, that reaffirms those concerns. So the 2 big things that we're expecting to impact the report today are vehicle prices, which we're expecting to fall 0.34. Got to get in that decimal point.
Yep.
And then OER that we do finally think is going to, show meaningful decline. We had a little decline from January to February. We're looking for a little more decline here. I would say that's more of the wild card and also more of the critical component that the Fed needs to see. So it really comes down to, will they have enough to feel comfortable cutting in June or July? And this is important because if they don't cut in June or July, then we're getting into election season. If they have commenced rate cutting before we're close to the election, then that gives them a little more cover. And look, they're not political, but the rest of the world is.
This is the second time we've heard this morning, Jim Bianco and Constant Hunter. If the labor market finally cracks and you get an 85,000 non-farm payrolls, you're telling me they're not going to act because of an election? I just don't buy it.
No, that I don't. I'm with you there, Tom. I mean, certainly if we see material weakness in the labor market, we are going to, the Fed has already told us, right, that they're looking at a more balanced view and that they're going to act. But if we're still seeing fairly strong labor market, we're still seeing, inflation that's a little sticky, it makes it harder for them.
Paul, ask a decimal point question.
Exactly. Hey, Constance, how about let's assume we get inflation prints today and tomorrow that are kind of in line with expectations. Is that enough for the Fed to start cutting in June? Because the rhetoric suggests that's the case, but I'm not sure the data's there.
So if we get the print we're expecting today, right, which is 0.24 month over month, and all of the corresponding components, that feeds through to a core PCE print of 2.6. So that puts them at their target for year end, right? If they've already achieved that today, they will get one more print on PCE before the June meeting. So it's not just today's data, right? It's the data that they're going to have in hand at the June meeting on PCE. And if the stars keep aligning and we continue to see this softening in the, after the beginning of the year sort of elevation and reset, then they're going to have data in hand that would allow them to cut in June because they're already at their year-end target.
So as we step back from the inflation discussion for just a minute, how's the overall economy from your perspective? I mean, the data for a lot of folks would suggest we've landed softly already. How do you think about it?
Yeah, I would say we're pretty deep into soft landing territory. And the landing part is important, right? Because what are we landing? Are we landing inflation? Are we landing the economy? Are we landing both? And there is not agreement about this, right? So I think a lot of economists look at it as soft landing on inflation with little economic damage. So have we landed inflation? Almost. We're not quite there yet, where we can see the runway, right? But it's a little cloudy. We're not sure we're gonna have a good landing. We think so. And then is it landing the economy? Well, the economy is sort of mixed right now, right? You look at those NFIB pieces of data, that looks very weak, right? But then, and then you reported earlier this morning, right? We saw a decline in mortgage applications because rates have gone above 7%. And so credit is tight for a big parts of the economy. Banks aren't lending as much because they've got to keep extra cash on hand on their balance sheets because they're nursing losses from their treasury portfolios, right? So it's a complex picture.
Okay, it's a complex picture. I want to go there. I want to go to the bipolar nature of the United States of America. You're talking like Paul Sweeney, decimal points of inflation, this. America's opinion, which President Biden doesn't agree with, is we're being crushed by inflation. Which is it?
Well, I've written about this, and it's...
Yeah, I know. That's why I asked the question. You don't think, Constance, I read your stuff?
I appreciate it. So you people feel the cumulative impact of inflation, right? They're looking at, and look, maybe we're not so much anchoring to the beginning of 2020 pre-pandemic, but people are looking at prices and going, well, this wasn't like this, 2 years ago, 3 years ago. You were talking about olive oil earlier this morning, right?
We were.
You were listening.
It's sort of like every once in a while people wake up and notice, like, oh my gosh, what happened to this price of this thing that used to be 15, 20, 30% less? And one of the things that's been very sticky is vehicle and homeowners insurance prices.
Yes,
right?
we talked about that this morning.
And you have to pay those. Those are not optional costs, right? And you feel kind of, you don't have any control, right? Like if your olive oil goes up, you can switch from Italian to Spanish and you can make that substitution and ease your consumption basket. On a car insurance, it's much more difficult, right? You can call back and push back and try to shop around, but it's not as easy. And so that's, I think, the mood that people feel.
We're out of time. promise me we can do a double barrel Julia Coronado, Constant Hunter appearance in studio.
Yeah.
They both come to New
We
York.
absolutely can arrange that.
We can arrange.
For sure.
My people will talk to your people. Constance Hunter,
Okay.
thank you so much. Keeping up with what you do at a 59th birthday party, the rotisserie chicken classic organic fresh pack direct from Sylvia's Harlem chicken is $7.42 per pound. That used to be $5 a pound. Your inflation report this morning with our news from New York. Here's Michael Barr.
Thank you very much, Tom, Paul, Lisa. Arizona will soon join 14 other states that have banned abortion at all stages of pregnancy. Bloomberg's Ed Baxter has the story.
Arizona's Supreme Court has ruled in favor of enforcing a Civil War-era abortion ban. It says doctors can be prosecuted for performing an abortion except to save a mother's life. Both Arizona's Attorney General and governor say they will not enforce the law. Governor Katie Hobbs here.
We continue to live under an unacceptable ban, a law that still strips Arizonans of their personal autonomy and has no exceptions for women who are the victims of rape or incest or any regard for pregnancy complications.
Politically, this will test Donald Trump's gamble to leave decisions to the states. Arizona is a swing state. Ed Baxter, Bloomberg Radio.
It sets a precedent in mass school shootings. The first parents convicted in a school shooting have been sentenced to at least 10 years in prison in Michigan. An Oakland County judge said that Jennifer and James Crumley missed opportunities that could have prevented their son Ethan from possessing a gun and killing 4 students at Oxford High School in 2021. Before sentencing, James Crumley told the court that he couldn't have foreseen what his son was capable of that day.
I cannot express how much I wish that I had known what was going on with him or what was going to happen.
The Crumleys were convicted of involuntary manslaughter. The U.S. and Japan plan to announce today a Japanese astronaut will be the first non-American to travel on a NASA lunar mission. According to a senior U.S. official familiar with the plans, the pledge is expected to be announced during Prime Minister Fumio Kishida's visit to Washington to meet with President Joe Biden. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
We are worldwide on Apple CarPlay, on YouTube. Search Bloomberg Podcast. Good morning from Buenos Aires. Paul, Michael Barr, you think we got trouble? The inflation rate in Argentina is 13%.
Oof.
In the last 30 days.
Whoa.
The annual rate on the Bloomberg terminal, you can get this in the Bloomberg professional service, 276%.
What do you do with that? I mean, when you go out to the store, you have no idea what you're paying.
You have an illusion that some of society can survive because they're within a domestic base. But anybody crossing borders in any kind of goods or financial transactions is just crushed.
Yeah.
And with John Micklethwaite's interview there, with their new leadership, the answer is they think they're going to dollarize. We'll see. We'll have more on Argentina. High inflation there. Good morning.
Now look at some local.
Headlines and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We are on Inflation Watch. The countdown to CPI data just under 15 minutes from now. Ahead of it right now, we have NASDAQ and S&P futures up about 0.1%, Dow futures up about 0.2%. The 2-year yield at 4.72%, that's down about 2 basis points. The 10-year yield at 4.34%, and that's down about 1 basis point. To commodities, we have spot gold at $2,348 an ounce, and over to oil, Brent crude at $90 a barrel. Companies making news, that's Apple. They're up 0.5%. India iPhone output hit 14 billion last fiscal year. Sources saying it now makes about 1 in 7 of the devices there. And then India also in the spotlight for Tesla, who's up 0.5%. They're reportedly in talks with Reliance about possible joint venture to build an EV manufacturing facility in India. Now, since we're talking Elon Musk Tesla, we'll go to its other company, Starlink. Sources are saying that his satellite business still burning through more cash than it brings in, despite his claims of profitability. That is your Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, thanks so much. Paul Sweeney and Tom Keene here, commercial free for the next 35 minutes or so. A critical inflation report for Chairman Powell, for all of us as well, a study of the inflation that's burdened us coming out of the pandemic, and let's say from Q4 of 2019. Neil Dutta will join us after the report with Renaissance Macro. He has been dead on about an optimism or resiliency of the American economy. Ira Jersey will join us with Bloomberg Intelligence, just brilliant on what the dynamics of the yield curve and the real rate show about price change and about our Fed policy in America. But first, we start this commercial-free half hour strong with Jane Foley, head of FX strategy at Rabobank. It's been way too long since we've had Ms. Foley on, and thrilled that she could come on today. Jane, is the dollar resilient and attractive because it's presumed we will have higher rates?
Well, the higher for longer story has been perhaps the dominant story for the markets this year. The market consistently pushing back on those Fed cut expectations. And that has fed dollar strength. I mean, there are other elements here too. And, there's a geopolitical element, for instance. To what extent could that feed into the dollar over the next 6 months or even longer? And of course, you have the US election too. And then this is really important because, we've spoken about this before, I'm sure, that the whole tariff situation. If Trump does come into the White House, if he does bring tariffs with him, that could be inflationary. And in fact, even if we look last week at Yellen's trip to China, you can read into the Biden administration potentially wanting to put tariffs out there to stop cheaper manufactured goods from China flooding into the market. So that would mean that we are looking at tariffs being inflationary on the goods that are affected. And that could mean that as we go into 2025, actually the Fed's easing cycle could be quite short, and it's set to be paused before the middle of next year. To
triangulate this, the euro dollar not through 109, 108. Dollar yen 151 is moved, but not really. But the one I'm really watching is a triangle of that. Euro yen is right out at 165, and off the CPI report to break through to a weaker yen off euro 166, 167 would be a reason not to speak to Jane Foley because she's going to be too busy on the desk at Rabobank.
Exactly. We'll keep an eye on that. So, Jane, putting that all together, as you think about the next 6 to 12 months, I wonder when you talk to your investor clients, is there any bear case for the U.S. dollar? Is there a credible bear case?
Well, I think if we are going to bring into the bear case, I mean, the simple answer is I don't really think that there is. But at the same time, I think we can ask, is there going to be some volatility around there? And I think one of the things that's been propping up the euro, because, the euro, yes, of course, it's weakened against the US dollar this year, all just about everything in the G10 has, but it has been relatively resilient. And I think one of the factors behind this has been this expectation that the situation in Italy could have been a lot worse. The market was a bit worried about the far-right government, and actually the market's thinking, hey, this far-right government in Italy, well, it's still pro-euro, it's still pro-Ukraine, so things could have been much worse. There's been a lot of optimism really about Italian bonds, but I think that could come to an end. The budget position in Italy has worsened. I think attention will be brought back to that at some point in the 6 to 12-month horizon, and particularly if growth does slow. So I think the euro could independently adopt a softer story. And actually, I would say, given the slow growth in the eurozone, particularly in Germany, and given the shock that the German industrialists have seen in recent years from higher energy prices, I would say that a weaker euro in an environment where inflation, is back in control,
right,
a weaker euro could actually be really quite beneficial. And I think the euro can stay weaker against the dollar for the next few years.
Wow. All right. What are we going to hear from the European Central Bank tomorrow, do you think?
Well, I mean, the market around this one there's a lot more consensus relative to the Fed, and the market is expecting the ECB just to lay the foundation really for a June interest rate cut. I mean, as I said, we have got weaker growth in the eurozone, particularly in Germany. Inflation is looking far better behaved now, and yes, okay, there could still be a little bit of volatility around there. The ECB is still concerned about the labour market and wage costs, as most G10 central banks are, but it does look as if they will continue to prepare the ground for that June move. And like I say, a lot of consensus around that view.
Help us with renminbi right now. We got a weaker renminbi, 7.23. Thank you so much to our team for really intelligent conversations on China. I thought Daniel Kurtz-Phelan yesterday with Foreign Affairs Magazine, with his expertise on post-World War II China, was just absolutely brilliant. Jane Foley on renminbi, could we actually see the easiest solution, which is a devaluation of the yuan?
Well, I think if you look at just the economics, then you would argue, well, yeah, that's something that we need to see, and maybe that's something that can help promote the Chinese economy. But actually, the politics are a lot more complex than that, and they would see a devalued renminbi as being a politically negative development, and one that could affect their credibility. So it is something that they do want to avoid in China. That said, if we were, for instance, to get a stronger CPI report, if we were to get another month of stronger payrolls, if the Fed feels that it cannot cut interest rates in June or maybe even to September or so, then I think that question has to come back, and we have to look at how much impact a potentially stronger dollar can have, not just in the renminbi, but also for the Japanese authorities and even other G10 authorities too.
Yeah. Jane, thank you so much.
Great.
Terrific brief here, particularly from renminbi over to euro. Paul, you're right. We've downplayed it today with a focus on America in 7 minutes, but ECB tomorrow is important. We got to talk to Ira. I'm going to get this out of the way right now. Because of his CPI report, we are Arsenal Aston Villa free
we are
for the
today.
next 7 minutes.
Oh, that's unfortunate. Okay. All right, Ira, thanks so much for joining us here. What's the Treasury market telling you these days, Ira, about inflation, about this economy, about where Fed Chairman Jay Powell may take us?
Yeah, the bond market's thinking that the inflation may not come down much more quickly than it has recently, and we're going to be stuck probably with CPI kind of at 2.5% for the next couple of years at least. So the market's a little more skeptical that we're going to see this immaculate disinflation that some economists are hoping for. And at the same time, they're thinking that the Federal Reserve is going to be relatively slow cutting interest rates. Just look at where 2-year notes are now, and basically we're pricing that part of the curve anyway is not pricing for more than 3 interest rate cuts, whereas when we were down at 4.25% earlier this year, we were pricing for basically 6. So the bond market's a little bit worried that we're not going to see the slowdown in the economy or the disinflationary environment that policymakers are looking for.
We say welcome on YouTube, Bloomberg Podcast, also on Apple CarPlay. Paul, huge audience here in anticipation of 5 minutes. We're commercial free.
We are commercial free. Ira, it's interesting here. I mean, I think, the expectation is that inflation is moderating here, but maybe it's going to be a little bit stickier on the way down. Do you think the Fed's okay with that, or does the Fed need to see something, more here to cut rates? Because the rhetoric has been, hey, we're still in the dovish camp, but we're also data dependent. And to me, the data kind of goes either way. They could do whatever they want here.
Well, I think they've been trying to guide toward that, not necessarily toward hikes, but certainly toward the potential for no cuts. at least if the data continues to come in reasonably strong. So 0.3 on today's CPI print is what's expected. You get multiple 0.3s, and the Federal Reserve is going to be questioning whether or not they have the ability to cut rates later this year, or they need to, right? There's no point if employment remains reasonably strong and you keep on getting 0.3 month over month CPI prints, the Fed on hold has to then become the base case scenario. You can't get there yet, right? Because we can get a 0.3 this month and then a couple of 0.2s and a 0.1 thrown in there over the following couple of months, and suddenly July becomes a realistic place where the Fed might consider cutting rates. But which is one of the reasons why this number is very important, because you get a 0.4 and we take out that possibility very quickly.
All right, let's do some math here right now. I'm going to go to second derivative, which is convex, concave, and some of the accelerative tendencies we could see here in 3 minutes. Ira Jersey, which part of your full faith and credit world do you focus on to glean the immediate second derivative? Is it the spread market like 2's 30s or the vanilla 2's 10 spread, or is it some single data point?
Yeah, I'm going to be looking more at the what we call the belly of the yield curve, Tom. So it'll be like the 5-year, 3-year, because that's the part of the curve where you get the expectation not only for what the Fed's going to do this year, but where the terminal rate's going to be, right? So how much they're going to cut interest rates and over what time period. So if we wind up getting a pretty weak number, then I think that part of the yield curve could probably outperform, because remember, not only are we pricing out the possibility for some cuts this year, but we're pricing out for a higher terminal rate once the Fed does start to cut.
Ira, let me translate that for people that drink Sanka. That would be me, folks. And the idea here is the 5 to 7 year maturity will see a greater price up and yield down if we get a constructive report. Did I say that correctly?
That's 100% right, Tom. Yeah. So
yes. Yes, the Sanka's on me this morning, Paul.
All right, Ira, real quick, what's Wall Street doing in terms of being in a position before this print here?
Good
you get
question.
A sense that
what's the bet?
The pros out there, what are they doing here?
Yeah, a lot of people have been unwinding and covering positions. So, the J.P. Morgan Treasury Sentiment Survey came out yesterday, and it showed that both their active clients and all of their all client survey were flat, were zero. So on average, everyone is flat, whereas they had been leaning somewhat long. As we've sold off, some investors maybe had been loading up a little bit on duration and trying to kind of pick the bottom of the market. So basically, buying at higher yields when they were more attractive. But going into this number, going into the Fed minutes, they got completely flat. So and that's pretty unusual, quite frankly, for investors to be exactly at zero. So the positioning is neither way right now, it seems, and really? People are waiting for this data to get an idea about where the future is going to be, and not only what policy action is going to do, but also will we see a rally in real yields, right? Look at TIPS yields right now, close to 2% is interesting.
Really well said, and I would really say that, folks. This is less about Fed policy for me and much more about the markets and what the animal spirit of the nation is. We welcome all of you across this nation, commercial-free here, Paul Sweeney and Tom Keene with Michael Barr and Lisa Mateo, as we look at a critical CPI report. We're on Apple Podcasts. It is free through the Bloomberg, Apple CarPlay, I should say, through the Bloomberg Business app, and on YouTube. YouTube, search Bloomberg Podcast. Huge audience out there. YouTube's huge. Share Overday with that article today. The Washington Post. Cool. We're going to get the month-over-month data, the year-over-year data, the core index. I have no idea what that is. Later on, real average hourly earnings at 8:30, and Paul Sweeney will have the FOMC meeting minutes and the rest of it here. An inflation report coming to you right now from across America. I'm waiting for the data, particularly on that critical 0.3% data, and it comes in a little elevated away from the free lunch people were talking about. Instead of 0.3, it's 0.4. Year over year, not 3.4, it's a lofty 3.5. And the big one, the wowzer to me, Paul Sweeney, is 3.7 core year over year. Comes out at a 3.8 with a spirited real average hourly earnings. the markets react.
S&P 500 just ticks down pretty solidly, down 0.7%. The NASDAQ off about 0.9% right on this data. Go to the yield space, Tom. The 2-year Treasury, the one that's really tied to short-term rates, up 11 basis points just in a couple of ticks here. The 10 years up 9 basis points, 4.45.
And the real yield explodes out 10 basis points, a higher inflation-adjusted yield, 2.09%. I'm taking some time here, folks, so Ira can digest this market-moving data. Curve spread, a little bit of disinversion, but the real dynamic is just simply in level. I'm not going to mince words. I said this on Monday. I was just guessing. Now I'm not guessing. We are on the 5% watch for the U.S. full faith and credit 2-year yield. 4.87%, rounded up 12 full basis points of movement. The 10-year 4.46. There's prosaic ideas like, what does this do to a 30-year mortgage is one idea. What does this do to money market funds, Paul? What do we start doing? Is it another $500 billion this week into money market funds?
It's interesting, Tom. I'm just looking at the top live on the reporting on the Bloomberg terminal. Chris Anstey, senior editor for Bloomberg News, says this is going to really question the feasibility of a June Fed rate cut. That's the bottom line, Tom.
He's had time to look at it at his studios in Princeton with Bloomberg Intelligence. Ira Jersey, and we'll have Neil Dutta with us in moments as they both digest the data. Ira, I guess I got to go to the Fed chit-chat. This is about as no June cut as we've ever seen.
No June cut, and we're going to start pricing out July in a hurry as well here, Tom. So, it very likely, when you keep on, this was not the worst data, obviously, that we could have seen, right? If 0.5 would have been worse, for sure. But it just shows you that the disinflationary environment is lagging now. So the idea that we were going to continue to have a slow decline of inflation just hasn't happened, and now we're starting to see a leveling off, and because of that, it's going to be harder and harder for the Federal Reserve to start cutting interest rates. Like, even make the case that they need to start cutting interest rates and calibrate their calibrate what they're doing. So it wouldn't surprise me at this point if the majority of the market started to price for the first full cut to be in November at some point in the next couple of days, because if they don't cut in July, then I think that they would just prefer to wait instead of making a first cut in September. They'll say that they would, every meeting's live, but quite frankly they've never actually cut within a month of the election. So I suspect that they'll skip September and go to November.
It's like saying Arsenal Aston Villa is a snooze fest. It's not. It's live. The VIX 15.70 up 0.72. Dow futures negative 300. S&P futures negative 46. Paul, let me lay out the Fed meetings. May 1, June 12, July 31, and the one I've been watching, which is September 18th. Forget about the politics. Forget about the election. They're going to have a lot more data into the Q3 season.
Yep. Enda Kern from Bloomberg Economy saying, no surprises here. Shelter and gas prices are fingered by the BLS as the main culprits here in the higher inflation print here. Yeah. So, I mean, Ira, is the Fed just saying, again, we're data dependent. We're seeing a little bit of a stickiness here, a little bit of a resurgence here in core inflation. So it's okay to wait. Is that kind of how you think they're going to message it?
Yeah, I think they almost have to mention it that way. And we get the minutes today, and they're not going to revise the minutes because of this number. But I think as we get into, and you hear some of the Fed speak going into the quiet period before that May meeting that Tom just mentioned, one of the things that you're going to look at is the shorter term, right? You've heard Governor Waller and as well as other members of the Federal Reserve talk about the kind of the shorter term momentum of inflation. And when you look at the 3-month annualized core inflation rate right now, it's at 4.5%. It was at 4% back in January, so that's accelerating, right? So that's not a good sign. Now, granted, seasonally this tends to be a time when inflation's a little bit higher anyway, so you have to take that with a little bit of a grain of salt. But it's still moving in the wrong direction, right? And I think that's one of the keys that you can take away from this report is that yes, people will nuance this and say, oh well, it's housing lagging. There's all these other indicators. Gas prices obviously, feed into at least some of this report today. But nonetheless, like, like in aggregate, you're still looking at an economy that doesn't have stable inflation quite yet.
We're going to rip up the script
Fed.
here. We're the Ira Jersey. He will continue with us, and Neil Dutta will join us in a moment. Commercial free to you across America until the 9:00 hour with the support of Commonwealth. We thank them for their work with our economics. Commonwealth supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more. We're thrilled to also tell you scheduled Tracy Alloway and Joe Weisenthal will rip up the script there as well and talk to Mr. Weisenthal and Ms. Alloway about this important inflation report. Dow negative 350. SPX futures at negative 55, the VIX out at 15.87. As Paul mentioned, the 2-year yield 4.89%. Now a 15 basis point higher yield, lower price on the 2-year yield. Ira Jersey, please stay with us if you can. Neil Dutta joins now from Renaissance Macro. Neil, this goes right to the ambiguity which you think is constructive. If we have a little inflation, I guess we're going to get a little bit of nominal GDP. Does inflation-adjusted GDP get crushed? Are you in like some 2% doom and gloom crew with real GDP?
Well, I'm not doom and gloom on real growth, but I think I agree with Ira that today's inflation number does push out the timing, and I think what's important for I think investors to kind of think about here is just how path dependent is that first cut. I mean, if it's not July, then are they not going to ease right before the election? I mean, how much of that enters their thinking? It's something to think about. The one thing I would say is that much of the upside surprise in the core CPI number this morning was driven by medical care services inflation, and it's important to keep in mind that there are differences of scope between the CPI data and the PCE data. And the CPI data is running, over a full percentage point higher than PCE. That's about twice, almost 3 times what's normal. And so, in some respects, I do think the market might be overstating how important CPI is for the Fed's reaction function, but it's a bad number, and at the margin that pushes the timing out.
Paul Sweeney, jump in here. Markets deteriorate, negative 70 on SPX futures, Dow futures negative 450.
And Tom, just on the currency front, dollar yen breaches 152. We're now 152 spot 44. Euro yen 164 spot 37. So a little bit of weakness there. So, Neil, where's inflation coming from? I mean, I don't know. I guess we always thought that this, last 100 basis points or so of reducing inflation would probably be the toughest. Where are we seeing inflation these days?
Well, you're seeing it. You're seeing it in motor vehicle insurance. That was a big driver for inflation last month. You also saw it in apparel. So apparel prices rose quite sharply. Keep in mind, though, what I would just say is that you look at apparel prices, they rose, I think, 0.7% in March, and that's following a big increase in February. But taking a step back, people are already making a trade-off, right? So if you look at real consumption of clothing, it's already declining. So in some respects, that is not the kind of inflation the Fed should be worried about. That's not demand-driven inflation. If people are cutting back in the areas that are going up in price, that suggests that people are making a trade-off already, and there's somewhat resistance to higher prices, which then raises the question about how long those price increases can stick. Motor vehicle insurance, it was going in the right direction. It was still very elevated, but it was going in the right direction for the last few months, and now it's reversing. But we did see things like car prices come down, so I'm not really sure what to make of that. Ultimately, if the underlying value of the asset itself, which is cars, is going down in price, you'd expect, the insurance cost.
Okay, I want to go to Ira right now, and then Neil Dutta with the same question. We're going to go mathy here because Dutta won't come on unless we go mathy. Ira, it's real simple. The 10-year real yield is now out over 2 standard deviations, up to 2.09%. It did it in February, Valentine's Day, when we all had to buy Lisa chocolate, killed us. And then from December, it's been a lift from 1.70 up to 2.09. Ira Jersey, are we at a critical point for the real yield?
I don't think so. The real yield is so the way that we look at the real yield, it basically two components describe most of why we're pricing where we are 2% for 10-year real yields. The first is just volatility in the market, right? So you're going to when the market volatility is high, you're going to demand a higher real yield. Number one, and then secondly, and I think that this is important, and one of the reasons you're seeing the big sell-off today there, and that's monetary policy. So if the difference between the Fed funds rate and CPI or PC, whatever inflation measure you have, you want to use is relatively high, then certainly TIPS yields have to price that in as well. So those two factors tend to drive this, and the fact that now that the market's starting to price out some of the early cuts and starting to price out some that terminal floor that we were talking about earlier, now the terminal rate floor is moving up as well. You'd expect to see somewhat higher real yields, and you're seeing that now.
Neil,
it's not unattractive, quite frankly, Tom. 2% plus inflation is an interesting, I think are interesting levels to think about for TIPS versus nominal treasuries.
Neil Dutta, look at the 5-year inflation adjusted yield, and we're back to a November almost pre-Thanksgiving pricing here, 4.53%. What does a 4.53% 5-year real yield do to American business?
I think at the margin, obviously it raises the cost of financing. I think what it does, frankly, what it makes look more ridiculous is the Fed's longer run expectations for where neutral rates are. Clearly, this is an economy that can still work at high rates. At these rates, I think that much is clear. But I think what it does suggest is that, the Fed's expectations for where neutral will be is just frankly too low. And I think, every month that goes by where we get a combination of strong jobs growth and higher inflation, I think that kind of basically cements that case.
Boy, I'm looking at just a couple categories here, Tom. Car insurance was up 22% from a year ago.
Let's stop.
I have no idea what's going on
Let's stop the show right now. I'm sorry. This is a fixed cost?
Yeah.
Can I say that, Paul?
I think so, yeah. I got to pay it every month. I know you don't. You've got the Bentley and everything, but for those of us that drive,
Neil Dutta, you say car insurance, except that's like breathing air. You have to pay car insurance, right?
You have to pay it. But as I say, it's interesting. It's interesting because it hasn't moderated yet. When you look, ultimately these things should follow the underlying value. What are you insuring, right? You're insuring a car. What do we know about the price of cars? The price of cars is actually going down. That's why core commodity CPI in this number was, on the softer side. There is, there is some of that going on. It could just be timing. But, you have to take these numbers as they come to you, given the uncertainty the Fed's been talking about. And I think, at the margin, that kind of should push them to err on the side of waiting.
Hey, Ira, looking at the 10-year Treasury here, we're up almost 14 basis points, pushing up 4.50. I know nothing about the bond market, and I say that proudly. 4 to 4.5% was kind of my range for the 10-year. Do I have to rethink that?
451 is a very important technical level on the charts. We've been highlighting that level now for about 10 days. You break there, and we can certainly get back toward 4.7% pretty quickly.
Wow.
I would like to say something, and just comment on something that Neil just said, and that's that higher terminal, the terminal floor, right? So the idea that 2.5% is no longer the kind of the base case. I think there's a recency bias that a lot of investors have, and certainly members of the Federal Reserve and the Fed staff have, and that's that we've come down, and that that terminal rates that our star is basically much lower than it was, say, in the 1990s or 1980s or 70s. I don't think we're going back to the 1970s or 80s, but certainly our star, the real funds rate, so the real neutral rate, has to be higher than it was prior to COVID, because there's a lot of structural issues that have shifted pretty significantly since COVID. We've talked about all of them, right? Whether it's immigration, work from home, there's a whole bunch of things to think about that way. But the idea that our star and that the real rate is higher, I think, is something that's underappreciated by a lot of policymakers, and I think that's going to take some time for them to get it into their psychology that yes, maybe 3% is the new 2%.
One final question, you guys. We've got to go to our other esteemed guests here. Neil Dutta, as simple as I can, is America oppressed by inflation now?
I wouldn't say that America is oppressed by inflation. I mean, if you ask consumers about their short-run inflation expectations, they've actually been going down, even though we've been seeing these upside surprises on inflation. I think that, to me, that disconnect, frankly, is quite interesting. The fact that inflation expectations have been moderating. I mean, we just saw that this week with the New York Fed consumer expectations data. I think that, to me, is one reason why I'm a little bit skeptical that what we're seeing so far this year is kind of the underlying trend for where inflation is. But the data are what the data are, as I mentioned. But you always have to kind of go back to first principles, Tom. I mean, ultimately, unit labor costs where is the inflation really coming from? You have to start worrying about it, at some point soon. If inflation continues to surprise in this fashion, you have to worry a little bit about declines in real wage growth weighing on consumer spending at some point later. So I do think that that's something that should begin to enter the conversation if this continues.
Somebody just sent in live chat YouTube, what am I going to be looking at? I'm going to look at Jason Furman up at Harvard, who does a wonderful annualized inflation series. I'm sure he'll get that out on Twitter here in a moment. Futures negative 64, Dow futures at negative 400. Thank you, Ira Jersey of Bloomberg Intelligence. Thank you, Neil Dutta of Renaissance Macro, with a real market-moving report today. The 10-year real yield, 2.09%. We are fortunate in that we're going to talk about their show. Odd Lots is just ginormous. Apple Podcasts is where you see it. And, you got a Chartable, and there's the Joe and Tracy, the Tracy and Joe show, and all that. We'll talk about Odd Lots, but we're going to open up the conversation with Tracy Alloway and Joseph Weisenthal here, just about inflation. Tracy, where are you seeing inflation? We've been making jokes about it, except it's not funny.
Well, my personal basket of inflation is all mayonnaise, so that's how I measure it. I haven't looked up the component change in the Mayo index just yet this morning, but I plan to right after this interview. Look, I think most of the unexpected rise seems to have come out of shelter costs and gasoline, or at least that's what the BLS said. I think the really interesting thing here is, and Neil and Ira were kind of touching on this, we can talk about the neutral rate, R star, the natural rate of interest, all we want. But the inflation data doesn't seem to be bearing out that entire thesis. And in fact, I thought it was really interesting last week. It kind of flew under the radar, but the Bank for International Settlements published a paper where they basically said, R-star's kind of useless, and we should probably just be looking at observed inflation instead of trying to observe this unknowable neutral rate.
That's called the gospel according to Tom Keene. Joe, what's your insight here now? I mean, inflation's oppressive. I just quoted Argentina with 276% annual inflation. That's oppressive.
Are
we oppressed?
Well, we still have real wage growth, as Neil was talking about. As Neil mentioned, even consumers' own expectations for inflation via various surveys have come down. So I think there's an argument that we're not being oppressed by inflation. It's still bad. There's two things that I'm thinking about, which is that there is this view among many, the sort of Powell, Waller, Bullard camp, I would say, that policy is tight right now. And on some level, and this goes to Tracy's point about the unknowability of neutral, it's like, if inflation keeps surprising to the upside and maybe accelerating a little bit since the last year, what do these words tight even mean in the context of the observed reality that inflation is drifting up? The other thing I keep thinking about, we have futures down today. Currently, S&P futures down 1.2%. The story of 2024 has been hotter than expected inflation prints and a red hot stock market nonetheless. So in the short term, yes, this is certainly a bump. But it has been interesting that that first cut keeps getting priced out further and further into the future. Now just 50 basis points priced in. And by and large, the stock market, by any outside of today, still doing phenomenally well.
Exactly. And Tracy, I'm just looking at, for context, seeing Bloomberg reporting here, shelter and gas combined contributed over half of the overall monthly increase. That's kind of what people feel month to month, day to day. This is I put in our internal chat, this is a problem for President Joe Biden. I mean, inflation, you don't want to see that thing coming back.
Well, I guess there's two things we're kind of learning here, which is one, a lot more people seem to care about how much things cost than the actual employment rate, right? Like the number of people buying stuff is just always going to be bigger than the number of people who are actually unemployed. So I think, it's great that the Fed can go out and say, well, the labor, the unemployment rate is at decades low, but the thing people see the most in their day-to-day lives is the grocery price or the price of gas or whatever. So that's one thing. And then the other thing I would say is, I think Biden has been tackling this issue in some new and slightly innovative ways, including talking about price gouging, talking about profit margins. And again, the rate of inflation on the stuff that is a daily need for people is where we see the most impact, right? So people have to buy food, they have to gas up their cars, whatever. They don't have a lot of competition in that market.
Paul and I don't have a real life. We don't travel. You guys are like jetting around. The Gulf Stream and usual. The rest of the country, are they is Arkansas or Texas, are they in disinflation while we're oppressed here in New York? I mean,
I don't think so. I mean, I don't think so at all. I think
you can see the regional CPI numbers.
Yeah, and I don't think there is some pocket of the country that's escaping it. And in fact, I think in a lot of these markets, you see hotter than expected inflation, in part because there's just been so much rapid growth and so much strain on the local resources due to the influx of population, which kind of maybe negates other advantages.
Okay, I got to talk about odd lots or when they put in the timeout chair, their handlers, they get upset.
Our rider.
You go off the thing. I mean, if you're in Calverton, New York, out by the Hamptons on a given weekend, and you got to figure out what to do with the acreage.
Oh, yeah.
You weigh in with a Tractor Supply Cub Cadet, 54-inch, 24 horsepower, riding lawnmower. That's what you do.
Tracy is too.
You guys talk to. Well, she's got the man's mode out for the dog. I mean, the dog. The dog needs exercise. But what did you learn? I mean, this is like a classic odd lots.
Yeah.
You're talking to Tractor Supply. What'd you learn?
So we had the CEO out tomorrow. Comes out tomorrow, and we're going to learn why Tracy keeps having to spend more and more money. On
I am the modal Tractor Supply customer.
But the really interesting thing economically with them, and it even speaks to what you were talking about with Texas and Arkansas, all that, is that there are some COVID booms that happened and then reversed. Yeah. Peloton, Zoom, et cetera, and then we sort of went back to normal. This move out of the cities has not really negated. And people are moving further and further and further apart. This was not just a one-off shock, and so it benefits their sort of strategy, which they sort of proudly say, we don't have anything near New York, but we have 3 stores near Odessa, Texas.
Paul, you're living this, and Joe and Tracy, I don't have a life, but the bottom line is Joe is 100%. I saw it just today with the eclipse, Monday, Tuesday, into this Wednesday. I'm sorry, they're out in Calverton or up the Hudson River.
I know.
I mean, that's all there is to it.
You guys also had a recent interview about U.S.-Mexico freight. I got to think that is a great growth story. I think about with the Canadian Pacific bought that railroad. Now they can go from Canada all the way down to Mexico.
Yeah, so we spoke with Matt Silver, who's the co-founder of this new company, which is building technology basically to facilitate cross-border trade between the U.S. and Mexico. And he's been talking about how it's booming. There was always auto production, manufacturing in Mexico, but that's really picked up. Yeah. And the point that he made, which seems kind of obvious, but I guess I hadn't internalized it, was the idea of Mexico having a competitive advantage just because of its geographic location next to the U.S. and the fact that it's in the same time zone. Yeah. You can go down to Mexico, drink tequila with a potential business partner, and fly back to the U.S. in a day, right? Try doing that with China.
One of the two.
Yeah, that too. You need recovery built in.
You got recovery built in. Guys, thank you.
Thank you.
Odd Lots out on Apple Podcasts. I'm spending a lot of time looking at the podcasts, and Odd Lots leading the way for Bloomberg with some intelligent conversations. I'm really interested in Tractor Supply as Tracy looks at the Cub Cadet.
You got to go, Tom. They have the baby chickens right now. They're very cute.
Oh, good. That would be good. Yeah. The baby chickens with vet bill and kennel fee. That would just be... I can't imagine. I think we'll do a data check, Paul.
Yeah, let's start.
Negative 66. Look at the Dow, negative 430.
Yeah, gets your attention here. And let's go to the yield space because we were talking to Ira Jersey, and that is his belly. But Tom, look at the 2-year Treasury. It's up 17 basis points here.
Oh, my word. Joe, 4.91% on the 2-year yield. Blow up odd lots. I mean, that's huge.
Rip up the script.
We're going to rip I mean, that's like 17 basis. Folks, for those that aren't into basis points, just substitute the word ginormous.
Yes.
I mean, that's what it is.
Yeah, so you got the big move in the bond market. The 10-year Treasury is up about 13 basis points, 4.49%. Ira Jersey called out a technical resistance around 4.51%. If you go up above that, then you're looking at 4.7%. So rates going higher. Mortgages are going to be going higher, Tom.
Right.
And the stuff that people see every day. What's interesting about the categories, we've been talking a lot about the categories, the pace of inflation for groceries easing sharply.
Stay with us at this huge inflation day, a big report. Steven Ricchiuto coming up. Tom Petty.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Why are we upset if we're creating jobs?
Inflation is still a thing out there for the everyday consumer.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. A market-moving and still market-moving CPI report 31 minutes ago. Futures deteriorate, negative 72. Dow futures moving to negative 500. We're at negative 460 right now. Out of stick on the VIX, 16.14. And Paul, as you mentioned, the shift, if you will, in the interest rate space is enough to Chairman Powell will be at his Bloomberg this morning. We are on the 5% watch on the 2-year yield.
Yeah, and looking at the short end of the curve here, up, let's call it 20 basis points here, 4.93%. That's the market reacting to this, well above average inflation print here.
We're going to have to see. Welcome on Apple CarPlay and on Google CarPlay, Bloomberg Business app, and huge audience worldwide and across the nation for a commercial-free hour there. On YouTube, search Bloomberg Podcast with a really intelligent live chat. We were talking, Omar was out, and he says he's going to ship me some tequila so I can get through the next CPI report.
Very good.
Thank you. I don't think that will get through the mailroom, but you never know. We're in the Interactive Broker Studio, and we say good morning to all of you. Let's get started. Our Bloomberg Business Flash with markets on the move. Lisa Mateo.
Oh, you could say that again. Futures are falling after March inflation data rises more than expected, 3.5% year over year, 0.4% month to month. Right now we have NASDAQ, Dow, S&P futures all down more than 1% right now. Over to the bond market, the 2-year yield 4.93%. That's up about 19 basis points. The 10-year yield at 4.50%, and that's up about 13 basis points. I want to take you over to commodities. We have spot gold lower at $2,334 an ounce, and we have Brent crude now at $89 a barrel, NYMEX crude at $85 a barrel. To earnings, Delta up more than 3% right now, expects second quarter profit and revenue to top Wall Street expectations. It's pushing some airlines higher. Airlines like United, they're up nearly percent, but now American, that's lower. That's down about 0.5%. And sticking with the airlines, the planes they use, we'll talk about Boeing. Their shares down about 1% right now after an allegation the company cut corners on the production of 787 Dreamliner jet. FAA starting to investigate. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. What a wonderful hour. Thanks to our team, Eric and all, for just really lining up intelligent discussion from Jane Foley on the dollar out through Ira Jersey with all this discussion of the bond market, the real yield 2.09%, well out over 2 standard deviations on the trend there on the Bloomberg. And then Neil Dutta talking. Neil Dutta, I thought, he finished his comments talking about the risk of a negative real wage again.
Yeah.
That's a shift.
Yeah, you don't want to see that. I mean, right, we've had some positive real wages for the last several quarters. You don't want to see that.
We start the 9 o'clock hour strong. Steven Ricchiuto, we're like, Ricchiuto, we're econed out, except, wow, what a report with Mizuho. Good morning, sir. Did you expect this?
Our numbers were not as bad as these numbers, that's for sure. The reality is, though, we have been in the camp that basically the data was going to keep the Federal Reserve from doing what the Fed wanted to do, which is cut interest rates, and that the economy fundamentally is healthier than a lot of people anticipate. Not surprised by it in that regard, but surprised on the month-over-month changes.
What about fixed inflation costs at the Eccles building when they sit around the table? Are they going to talk about we have to eat? We have to pay car insurance. We have to pay rent or a mortgage averaging out now at whatever it is, 5-6% up to the 7.3%. Did they talk about required inflationary costs versus luxury inflation?
Well, they really should, because at the end of the day, they're trying to maximize social welfare. And their concept behind keeping the labor market as tight as it is to try to drive up wages. The problem is by keeping the labor market tight in an environment where all the excess capacity has been used up in the system is it creates inflation. And that's when you get into the situation, as you indicated a few seconds ago, in terms of negative real wages. So your attempt to try to maximize social welfare by keeping a labor market tight could go against you if CEOs and companies feel they have pricing power. And after seeing this kind of improvement in the data, you're starting to see that again, that's a broad-based improvement in the inflation numbers or rise in the inflation numbers, is telling you that more and more people feel they do have some pricing power left. And that's why it's working at the detriment of their desire to maximize social welfare.
So, Steve, I think the initial round of inflation that we saw from the pandemic, a lot of folks said, hey, this is supply side driven. It'll play out. Is that still the case?
Well, it did play out. And the reason why, I mean, you hear people all the time, well, inflation was up at 9%, now it's at 3%. All of this is happening because of the Fed. It's not happening for the Fed. It was happening as a result of the supply side and the fact that even though fiscal policy is still very, very accommodative, it's not as accommodative as it was.
Yep.
So between those two factors, you've taken inflation down to the 3+ percentage points. Getting it from 3 to 2 is a very different story. This is where the Fed has to get involved. And the Fed has been telling you over and over again, we want to cut rates. And it's been damaging their ability to create a better inflationary environment.
When you see inflation at maybe just the last 3 months ticking up a little bit, does that change your economic outlook as it relates to the consumer and the retail sales and all these types of things that probably go into your GDP model?
Well, I mean, it reflects more what we've been saying. We've been in the camp that the labor market is tight and the Fed's not going to achieve its inflation target. So at some point, the Fed either just walks away from its inflation target, which is a risk, but then that implies higher long-term interest rates. And that goes against the desire of the same people who want to cut rates because they want to see lower mortgage rates. They want to see people be able to afford to buy homes. And therefore, they get themselves into this catch-22, and they haven't been able to get themselves out of it because the economy is fundamentally healthy.
And now just looking at the WIRP function, pushing out maybe only 50 basis points for the entire year this year. And a big contrast to how we started the year with a lot more cuts factored into the market. Does the Fed wait till September? I don't know.
Well, they certainly have another opportunity in June when they redo the dots again. I mean, my personal preference would be that next year when they do the review of monetary policy, they eliminate the dots. I think the dots create more problems.
But we have a function on the Bloomberg terminal. Dots go.
Yes, I know. I think that creates more problems.
I would say with great respect to Mr. Bloomberg, can the dots go away?
Right. Yes, please go away.
Okay, thank you, Steve.
And I think that would be a positive step in the right direction for them. But until we get that, I think you're probably waiting to June. I don't think you'll get any real messaging coming out from the May FOMC meeting.
I want to go political here, which is not, it's not that you're not comfortable with that. Steve, you're so able that you can answer this beautifully. I'm sorry, but inflation is the haves and the have-nots. The president's got to address this. This is now 1, 2, 3 months of persistent inflation. But to me, there's a great separation in America. For example, Paul, and I'm thinking of the great Barry Hinckley from the iconic Hinckley ship family. He's trotting out Martha Stewart's Skylands 2 Hinckley picnic boat. And because he's helping Martha slide into a Hinckley picnic boat, and this is popping like 1.72 million. This is
wow. They look nice though.
This is like gorgeous. This is Porcelli takes us down the Hudson River to go over to Peacham.
Okay.
Steve Ricchiuto, I'm sorry, there's a haves and have-nots to inflation. The fancy people that have Hinckley picnic boats, they're not worried about this report, are they?
No, but you're right. There is a real difference, and this comes down to the maximized social welfare. The people that they supposedly say they want to help, they're not helping with the policies they're creating. And that's the underlying problem for this administration. They have loaded the Federal Reserve with a bunch of doves, and those doves really want to cut interest rates in an environment where the economy is telling them you shouldn't be cutting interest rates. And then there's this academic environment that you get from a lot of Wall Street economists which say, well, rates are just naturally too high. I wish they would just come down and normalize. People don't know what normal is.
Yeah, but Steve, those academic economists and the market economists are people that either have, want, or aspire to a Hinckley picnic boat.
Yes, they do.
They're not our listeners out there living this.
You're 100% correct, and this is why the mistakes the Fed are making is basically allowing this economy to stay too tight, or too hot, that you are actually creating pricing power for corporate America, which then wants to create double-digit returns. And that double-digit returns is what then drives up equity prices. Now, equities are having a hit in here, but let's be honest, they had a hell of a great run in the first quarter of the year.
Martha Stewart's picnic boat is Skylands 2. Do you know what mine would be? Dramamine. It would be Dramamine on the back. Steven Ricchiuto, thank you so much. Barry Hinckley and Martha Stewart, thank you so much as well for giving us inflation perspective. While we chat, the market deteriorates. Futures, negative 77. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, and Lisa. Arizona Supreme Court has reinstated an 1864 law that criminalizes nearly all abortions in the state in a ruling that puts a tough issue for Republicans back in the spotlight. Wendy Schiller heads the political science department at Brown University.
When Kerry Lake, who's a presumed Republican candidate for Senate, who ran for governor in Arizona recently, and for Senate says, wait a minute, no, we don't want to go there, then you know the Republicans are quite worried about the impact of this kind of decision. Before Arizona was even a state, before women could vote, before African Americans in the South, for example, could vote, I mean, there is some limit, you think, to sort of basing everything we do on laws that were passed 150, 200 years ago.
Brown University's Wendy Schiller was a guest on Bloomberg Daybreak. Today was supposed to be the day the articles of impeachment against Homeland Security Secretary Alejandro Mayorkas were going to be transmitted from the House. That process was delayed by House Speaker Mike Johnson until next week. Senate Republicans want to make sure they're in full force when the proceedings start. Senate Majority Leader Chuck Schumer says there are no charges in the House complaint that rise to the level of impeaching Mayorkas.
We're going to try and resolve this issue as quickly as possible. Impeachment should never be used to settle policy disagreements.
Senate Republicans are pushing for a trial. U.S. Ambassador to Japan, Rahm Emanuel, says President Joe Biden's administration is looking to reverse China's attempts to isolate countries in Asia, including the Philippines, with help from Japan and other allies in the region.
Our strategy is to flip that script and make the isolated party China.
Emanuel's comments to Bloomberg come ahead of the summit between Biden and Japanese Prime Minister Fumio Kishida, who are expected to announce today a Japanese astronaut will be the first non-American to travel on a NASA lunar mission. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. Paul Sweeney, Constance Hunter, thank you for starting our 8 o'clock hour strong. Out on Twitter, brilliant. Food at home up 25%, 5.7% annualized. Shelter up 22%. This is back 1, 2, 3 years, make it 4 years. Shelter up 22%, up 5% annualized. Car insurance up 44%, 9.3% annualized. That's the real world that Steve Ricchiuto was talking about.
Exactly right. So, again, we've got 3 months of data here, Tom. We're showing that at the very least, this inflation is going to be sticky as we try to move lower here. Yeah. Or if you're a bear here, you see a resurgence of inflation here. Torsten Slok, Apollo Global, out with his note.
What's he say?
The lead, Tom, is we are sticking to our view that the Fed will not cut rates in 2024. So they're sticking with it.
We'll see where we are in November, December. But Mr. Slok and others, Dr. Slok, I should say, they've nailed it. I mean, and the other crew, you can get a turnaround here, but I'm sorry. I haven't looked at the second derivative. To me, that's what's important. I need Jason Furman up at Harvard to help out with his annualized. But somebody said, Ricchiuto, I believe, annualized, 3-month annualized is 4.x%.
Yep.
I mean, that's a big, big number. Stay with us. We'll have further discussion of this. A bombshell CPI report. Futures, negative 80. The VIX, 16.37. Good morning.
And breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures taking a hit after U.S. core CPI tops forecasts again for a third month in a row. That will likely have an impact on the Fed delaying interest rate cuts. We had gas and shelter accounted for over half of the overall monthly advance. We have NASDAQ futures, S&P, Dow futures all down more than 1%. To the bond market, the 2-year yield at 4.95%. That's up about 21 basis points. The 10-year yield at 4.49%, and that's up about 13 basis points. Some companies making news. Taiwan Semiconductor Manufacturing, ADR's little change, but its sales surged the most since 2022 after riding that AI chip boom. Its full earnings report, that's due out next week. And we'll stick with tech. We'll go to Alphabet, down nearly 1% right now. And this is despite Google unveiling a few updates to its AI offerings at its annual cloud conference. And then we'll turn to China. Alibaba, after stepping away from the spotlight, Jack Ma actually applauded the company's latest overhaul plan. It was in a rare memo. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Nice comment out on YouTube on the live chat about the opening bell. It should be interesting. I take your point. We're 12 minutes away from an opening bell. Let me frame the equity markets. I'm going to give you the futures levels. We're just under 5,200 SPX, 38,700 on the Dow, NASDAQ 18,000. As we were making jokes about last week, it's like, it's not a correction. It's a pullback, blended 1.3%, maybe is where we are, futures negative 69. But Paul, it's going to be interesting. There's going to be it's Wednesday. There's going to be a reassessment over the next 48 hours. And then, boy, are a lot of smart people going to have to reset and write this weekend about the view into towards July.
Yeah, exactly right. I mean, if you look at kind of the Fed funds looking at maybe only 50 basis points of cuts this year, maybe a couple cuts. We started the year at 6 cuts. So the inflation is sticky, to say the least.
The religion of the University of Chicago is a respect for ambiguity. That is when the microeconomics of whatever you're talking about looks this way or that way. Anna Wong joins us now, head of Bloomberg Economics. Anna, just as simple as I can, what's the ambiguity within a dearth of disinflation? Which way can this cut? Which two ways can this discussion cut in the coming months?
Tom, it is indeed, and the ambiguity is that CPI is not the metric that the Fed targets. The Fed targets PCE, inflation, and even though, if you look at the hundredth decimal point of this CPI report, it actually shows you core CPI grew 0.36%, which is exactly the same as the previous month, down to the hundredth decimal point. And that would likely map to a core PCE inflation that's less than 3%, or as Powell would say, well below 0.3%. And it's actually not that far off from the Fed's 2% target, which was why if you look at the FOMC minutes that we're going to get later today, it's going to show that yes, the Fed was slightly alarmed by the higher CPI in previous month, but in terms of the PCE, it's still, just slightly above what they were thinking.
Second time we've heard that. PCI below here. Paul, jump in here with a question.
Well, just Anna, real quickly, just looking at, do you think the bond market's overreacting here? The 2-year Treasury's up about 20 basis points?
Well, I think that they were overreacting before. So today they further overreacted. However, I will say this, that it is alarming to me that this March report is not better, because we are entering into a 4-month period of favorable seasonal pattern for CPI. It should be better. And so even though core CPI is exactly the same as the previous month, down to the 100th decimal point, I do think that the Fed will take more signal from this one than the previous one, because it's supposed to be better.
And we're going to let you get back to publishing. We're going to have to blow up the reports and move forward, but very smart there, down to the 100th of a percentage point. Anna Wong driving all of our U.S. economic coverage. We parachute in now the gentleman who will be in the front row at meeting 1, meeting 2, meeting 3 to get to September 18th. Michael McKee joins us right now. Michael, we have had such a rich discussion this morning of this inflation report. What will be the discussion among the researchers at the Fed?
Well, I think that their biggest challenge is to figure out why the numbers are not going down. The Fed stopped moving the Fed funds rate in July of 2023, and we have not seen inflation fall since then. It's been stalled out at about this 0.4 a month rate. So something is holding up the inflation numbers, and it seems to be, for the most part, in services, but different services each time.
Right.
So if you're using monetary policy to bring it down, you have to try to figure out what's not moving
Come on, Mike.
whether you have any control over it.
Every anecdote I have is it's the cost of labor. Do you disagree with that?
Possibly. When you look at the categories that went up this time that really pushed things up, it was in transportation services, primarily motor vehicle insurance. And that's largely because they tell us that it is getting more expensive to fix these more complicated computerized cars. And also something that had been unchanged for a while, medical care services. Now, it's possible labor comes into that, although most of the labor services kind of people in that area are lower paid, medical technicians, et cetera. We haven't seen a big hiring of that. Drugs went up. So those are things that don't seem to be labor related.
So, Michael, I guess one of the questions I think probably a lot of people will have now, even more this morning, is does the Federal Reserve have the will to not cut rates? Because they seem to be leaning that way over the past month or two.
Well, they were looking forward to being able to cut rates because they thought they had maybe the soft landing in sight. But at this point, you're starting to see more and more of them talk about dialing back the number of rate cuts, and I think that's what you're going to see at the June meeting when they come out with their next dot plot. They're going to be on hold in May, and we'll get a couple more numbers before then. And as Anna was saying, they look at the PCE rather than the CPI. The CPI is a little more volatile, so we shall see what happens with the PCE. But it doesn't give anybody reason at this point to cut rates. So they stay on hold in June, and the markets have now priced out July and almost priced out September.
Seems to be efficient here. Again, I think what the market's following, Michael, is this is a Federal Reserve that has always said they're going to follow the data. And right now the data, one could argue, and the market's certainly suggesting, does not support a rate cut right here.
Yeah, it was interesting on the Bloomberg TV surveillance this morning. There was a debate over whether the Fed had complicated matters by talking about rate cuts and then not talking about rate cuts. I think it's really a question about this communication and about what markets are doing, because markets are adjusting to everything on a minute-by-minute basis, whereas Fed hasn't changed its forecast since January, or March rather, hasn't changed its rate since July of 2023. So the Fed has been on sort of a steady course, but what they say about it does seem to matter.
Michael McKee, thank you so much from Washington. Are the Capitals home tonight? Is that why you're down there, Mike McKee? Is it a little bit of, Ovechkin?
I believe they played last night, but some of us will have to get up.
Some of us were only 10 seats behind the bench.
Watch.
Michael McKee, thank you so much. Always leading our economic coverage there with great perspective, and he will be in the front row as we have the Fed decides here. I believe it's May 1. We need to get the market. So, Paul, this has been just exhilarating. Ooh. The conversation level.
Great
lineup
of
Jim
smart voices.
Jim Bianco looks, can we just have a moment of silence for Jim? He has to wake up every morning and go north to the Cubs or go south to the White Sox.
Exactly.
But he has just absolutely killed it over the last 6 or 7 months in saying, hey, everybody, the last mile of inflation is going to be sport.
It's going to be tough.
And then on from there to great conversation.
Certainly right with the data today. We had the inflation data coming in a little hotter than expected here. Let's call it a warm number. And that's all the bond market needed here, Tom.
Big number, 4.94% on the 2-year yield. We're on the 5% 2-year yield watch. We need to get the market open. Stay with us on Apple CarPlay, on Bloomberg, on YouTube. You search Bloomberg Podcasts, on Bloomberg Originals, on Samsung TV and Apple TV. Good morning.
is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo alongside Tom Keene, Paul Sweeney with your opening bell report. Now, the comments coming on Surveillance YouTube live chat going crazy after the latest inflation data. CPI came in hotter than expected. They're talking about the rise in auto insurance. They're talking about housing, gas. Rightfully so, because it is all up right now. Everyone waiting to see how the markets react. So let's get right to it as the numbers start to come in. We have the S&P 500 down more than 1% right now. The Dow is down nearly 1%. And we'll get to the NASDAQ as things start to tick in. And that, too, down more than 1%. To the bond market, the 2-year yield at 4.92%. That's up 18 basis points. The 10-year yield at 4.47%. And that's up about 11 basis points. To commodities, we'll check in with spot gold lower at $2,324 an ounce, and over to oil we have Brent crude at $90 a barrel. At the bell, also want to check in with Delta. Their shares up nearly 3%. It gave a second quarter forecast for profit that was ahead of expectations. How it's affecting other airlines? Well, United right now down nearly 3%. We have American Airlines down about 0.5%. Southwest is up about 1% right now, and then we have JetBlue. They're down 1%. That is your Bloomberg opening bell report. Tom and Paul.
Thanks so much. I greatly appreciate that, Lisa. Stuart Kaiser over at Citi says CPI report, it's a dent in outlooks, but he says it's not a game changer. He still looks for some good moves in the equity market. Right now, the good move is negative 423 on the Dow. Perfectly timed, combining in a wonderful international perspective with his domestic work for American Century Investments. We can only have American Century Investments on when the Kansas City Royals win 5 games in a row.
Really? Okay.
Yeah, that's the way it works. They started strong today. Charles Tan joins us, their co-CIO of fixed income. What are you going to write about off of this report and the previous 2 reports of inflation? Does it change the vectors that you study of price change in America?
Well, Tom, first of all, thanks for having me here. Well, we don't think it does. We think that this is, in the Paul's world, another bump in the road. I think our view on inflation really is that, structurally, inflation is up, but cyclically, it's going to be down. What that means to us is over the next, let's call it 6-12 months, we do see inflation continue to moderate towards the Fed's 2% goal. But after that, and structurally, I think the inflation is going to probably pick up, for reasons we've been talking about, structural changes in global landscape, deglobalization, supply chain, and domestically here, uncontrolled spending, sticky wages. But we do see the sequence being inflation will continue to, moderate, despite the first 3 months of bumps on the road.
So what do you do in the fixed income space here? I mean, I can go to a 2-year Treasury today and get 4.92%. Yes. Do I just stick there? Do I need to go out and take some credit risk? If so, how far do I go? How do you guys think about that?
Right, so that's a great question, Paul. So actually, with rates are up, it's actually pretty good news for fixed income investors. So if you look at sort of over the past few years, I think there are 2 main themes that are dominating the fixed income market. The first is the inverted yield curve you just mentioned, and which makes the front end yield very attractive. The other aspect really is the sort of disconnect between spreads and yields. Yields are up and the spreads are down, right? So if you combine these 2 together, and for the more conservatively minded investors, parking in the front end, whether it's money markets or short duration, getting 6 to 7% of a safe yields without taking much credit risk or taking the inflation risk. It's a good way of
Paul, we got to put this in perspective, and I think the president's going to have to confront this with his group, including I still call her Chair Yellen, excuse me, coming back from Beijing. Jason Furman, this is 37 minutes ago on Twitter. I'm going to read the entire statement here, and Paul, frame this out with Mr. Tan as you can. Furman of Harvard, over the last 3 months, core has risen at a 4.6% annual rate over the last 90 days. That is faster than any 90-day period from 1991 to pre-pandemic. Over the last 12 months, core is up 3.5%, faster than any annual 12-month period back to February of 1993.
Yep.
That's where we are.
Yep. So I guess given that backdrop, Charles, I mean, how do you think the Fed's going to respond to this? Because I think they were kind of gearing themselves up for, that pivot discussion we had several months ago to even some most recent comments about being dovish here. Can they still follow through with that? Because the market's pushing those rate cuts out.
Right. No, I think, with this print and also the first couple months prints, I think it does make their job a lot harder, right? I think, the way we read them is that, I think their default position is, they want to cut. But then with this kind of numbers, it will be harder for them to justify or to bring the entire FOMC into a consensus, right? So there is a lot of hawks and doves on both sides. But we think, they probably have to wait out. So
right.
June is out. July is a possibility. But I think they still want to put in at least one cut, if not two, before the election.
Right. Where will money market funds be? I mean, last month, I should say, we had a real inflow. We're well out over $6 trillion in money market funds.
Right.
Does American Century, and I mean, come on, a lot of what you're doing is, I'm afraid, I want to get in something short. With that said, do you frame out $7 trillion or $8 trillion money market funds?
8 trillion would be a stretch. 7, higher 6 is a possibility, right? So, Tom, a lot of this money is really coming from the bank's deposits, right? And,
yeah, okay.
Right. So part of that is there. There is also people who are simply just happier, as we said earlier, parking at the front end, getting 5% and change without a worry.
Can I ask a dumb question? Yeah. What does the American Century Money Market Fund buy? What's the underlying of a 5.6% money market fund?
Yeah, so we buy Treasury bills, we buy the CPs, and there's also repos, right? So those are the primary components of our holdings.
Do you see any liquidity issues there? Any structural issues with these flows?
No, we don't, and the market is functioning.
I got to make some news here. Come on, be honest.
Yeah.
A lot of folks are saying in fixed income space, structured credit. To me, structured credit means like a mortgage-backed security. Is that the kind of stuff that you guys are thinking about?
Yeah, so there are two broad categories. Mortgage-backed security, MBS. Certainly it's part of the world. There's also more credit, focused markets like ABS. Say airline, aircraft, ABS deals, commercial, mortgages, securitized papers. So yeah, those are our two components.
And those are for. I would think they'd be much more out on the risk curve, but you're comfortable doing that, or are they not as risky as I'm thinking? Maybe.
Well, MBS is not risky, right? So probably it's just the credit quality just below the Treasury, right?
Yep.
So which is yielding pretty nicely, right? So then the other sort of end of the spectrum is called CMBS, right? So which is a lot of hairs, people are worried about them, but there's also a lot of babies throwing out with the bathwater, right? So if you know where to look. That's the key, right? So you want to control your, office, exposure. But if you have good assets, sort of in the pool, backing the securities, you can get 10-11% of a yield for CMBS PPP rated paper.
Okay, I'm looking at Kansas City. West 55th Street. There's a manse there, Paul, that you and I could slide into.
Yep.
It's $6 million in Kansas City. That's rich.
That is rich.
That would be like $20 million, out in the in the fancy area where you
Shawnee Hills.
There's another one here. Well, it's got like 1, 2, 3, 4. It's got like 8 pillars. It looks like Tara. Okay, $8.5 million. What's Kansas City real estate going to do with a 7.8% mortgage rate? I don't get it.
Well, I think that's exactly the vulnerability of the parts of the economy, right? So there is a kind of bifurcation. If you look at the parts of the economy that are struggling, it's the ones that are exposed to rising rates or forced to mark with their funding. Commercial real estate is one of them. Regional banks is also one of them, right?
Yep.
And we have to pay up the deposit rates, but also small businesses. We just saw an FIB. Small business optimism, index dropped to the lowest point. Those are the parts of the economy will struggle, right? So the only reason I think the economy is still appearing very resilient really is deficit spending, right? Unprecedented level. So to the extent that the governments continue to pump fiscal money into the economy, it can continue to go on for a little bit longer. And the inflation will probably linger a little bit longer and higher as well.
This has been wonderful. Don't be a stranger. We're throwing you out because the market's going down because of you. Charles Tan.
I'm going to go back to my desk and buy them.
I want you to come back and talk about your China. Seriously, you've got huge heritage with what's going on with China. We got to talk international as well in this CPI day. Charles Tan with American Century Investments. The markets deteriorate. The Dow Jones Industrial Average down 500 points. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. President Biden has more tough words for Israeli Prime Minister Benjamin Netanyahu after the attack that killed 7 aid workers.
I think what he's doing is a mistake. I don't agree with his approach. I think it's outrageous that those 3 vehicles were hit by drones and taken out on a highway where it wasn't like it was along the shore. It wasn't like there was a convoy moving there, etc.
The president spoke in an interview that aired last night on Univision. It was taped 2 days after the strike that killed the World Central Kitchen workers. Biden says Israel should agree to a 6 to 8 week ceasefire and work with other countries to allow aid into the region. Political fallout after Arizona Supreme Court upheld a near total ban on abortions. The ruling hinges on an 1864 law written before women had the right to vote. The only exception is if a mother's life is in danger. Doctors could face up to 5 years in prison. Arizona's Democratic Governor Katie Hobbs urges voters to have the final say this fall.
To the people across Arizona who are concerned about the future of abortion rights in our state, who are worried about their bodily autonomy, who don't want to see the freedom of their wives, sisters, and daughters restricted, you can make your concerns known at the ballot box, and I encourage you to do so.
President Biden calls the ruling cruel. The law is set to take effect in 2 weeks. Finally, how many streaming services are you paying for every month?
Killing me.
A new survey from CNET finds that the average American spends $91 on subscriptions per month, and almost half of them are from free trials we forget to cancel. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Down negative 480. We're monitoring this. The VIX up a stick, 16.04. Let's go there. This is more important. Paul, how do you cancel a subscription?
Well, you know what's interesting? The streaming app subscriptions are easy to cancel, and that's one of the problems because churn is really high.
Like Disney or Hulu
You just
or
literally
Max.
go into your phone and you just can't cancel it, as opposed to your telephone service, your cable service, your satellite service, which is notoriously will take you 5 or 6 hours to cancel, if you could even get them to agree to it. So that's kind of the issue. But as Michael just reported, $91 for streaming services. And then, oh, by the way, you're still paying for broadband from a Comcast or a Verizon or something like that, and that's running you $60 a month. That's $150. Hey, what were you paying 5 years ago to a cable company? I don't know, $100.
Yeah, and the one he's pointed out, the ones that you forget that you that you didn't cancel and they're still on.
So
there,
the streaming business it fixed the problem.
What I do is I
don't know.
cancel them and see if anybody complains. The dogs, I just say to Vet Bill, I say shut up. But if the kids
The
complain,
Animal Planet, it's gone.
I'm sorry. To Shira Ovaday's article in Washington Post today, they're all watching YouTube.
Yep.
I mean, that's all there is. I mean, it's not rocket science. Do you know YouTube is streaming like bigger than Spotify?
Sure.
Or Tidal or Apple Music? I don't even know how to do that. I had no idea.
Advertising juggernaut is kind of.
I'll get it on social. I did earlier this morning. Shira Ovaday, love her to death, and she got a great summary here of the success of YouTube. We say thank you to YouTube for all their work for us. It's game-changing. Search Bloomberg Podcast. The live chat's on fire. Good morning, everyone.
hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Inflation coming in hot for a third month in a row. In case you missed it, core CPI increased 0.4% from February, 3.8% from a year ago. The market's now pricing in only 2 rate cuts in 2024. Now, the reaction on Wall Street, crystal clear. We have the NASDAQ, Dow, S&P 500, all down more than 1% right now. The 2-year yield at 4.93%. That's up 19 basis points. The 10-year yield at 4.48%, and that's up 12 basis points. To currencies, we have the dollar stronger, Japanese yen, euro, British pound weaker, Bitcoin lower by 2% at 67,690. Companies making news, Taiwan Semiconductor manufacturing their ADRs. Well, they're up about 0.5% right now, reported better than expected sales growth in the first quarter. Then you have Apple, they're down 1%. India iPhone output hit 14 billion last fiscal year. Sources are saying can make 1 in 7 of the devices there. And Boeing, they're down as well. Allegations that the company cut corners of the production of the 787 Dreamliner. That is your Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, thanks so much. Here's what we're going to do. I mean, we're going to watch some markets. Negative 500 right now in the Dow, SPX negative 62, 1.2% down pretty much across the indices. VIX out an ugly 1.23.16.21. We had a huge response, like record response, I say, when young Andrew Murphy showed up from Deepwater Asset Management wearing the goggles. Biggest response, Andrew, we've ever got. We had Giselle on, and she didn't get as big a response as you with the goggles. So take the damn goggles off, because I know you can't see us. How are they doing? Where you are months down the road, have the goggles worked out for Tim Cook?
You know, I think these devices are spending more time in drawers and on shelves than most buyers would like. So bottom line is we're incrementally more negative on the technology in the near term.
Right.
But we still think longer term future versions could be 10% of Apple's revenue, similar to the iPad.
We're going to stay. We'll watch the markets, folks. Negative 507 on the Dow. You know the ugly report. Paul and I looking at the 2-year 4.94%. They'll be on the 5% watch in the 10 o'clock hour. Andrew, let's stick on Apple. India, I thought they owned China. Do they want to make India another China for Apple?
That's exactly right. Today, about 40 to 45% of Apple's revenue is produced in China, which is a risk for them. So we expect them to dial that back to 25 to 30 by the end of the decade. India will be the primary beneficiary of that shift.
So let's go to that China story just in general. As investors, as long-term observers of the Apple story, the stock has underperformed some of its big tech peers here. What are you guys thinking about this stock right here?
Well, it's not a stock that we own in our strategies, and we're generally see more risk than reward in Apple's upcoming March quarter. China is a risk, like you mentioned. The other thing is antitrust lawsuits, the DOJ. We think that's more noise, more bark than bite. But China is a serious risk overhanging the stock.
So about India, though, I mean, a lot of folks have been saying just in general about technology, China was the last 20, 25, 30 years. India might be the next China over the next 20 to 25 years. Do you guys share that kind of view, that kind of optimism about India as an opportunity for big tech?
We do. India is not just an important place for Apple to build products, but also to sell products. It's an important growth area. In fact, on the last 2 earnings calls, India has been mentioned about 12 times on average versus 3 times in the preceding earnings call.
What's free cash flow look like? I mean, I know you've got a relationship with Apple. Gene Munster mentioned that the other day. I want to be careful about this. But the Magnificent Seven, as we go into earnings season, does Deepwater feel there's ample free cash flow there so there won't be a negative surprise across the many stocks?
We do. We think the Mag 7 and the largest S&P 500 stocks are driving the lion's share of the earnings growth in the market today. So we are optimistic generally on big tech to continue this bull run, driven a lot by AI.
Okay, let's talk about Google. I mean, we got to go there. I mean, I usually don't. I mean, Lisa calls it Alphabet. I don't know.
I don't know where she gets that from.
But Google just seems like a managerial mess. Are they focused?
I think they are. I think it has been a mess as they've rallied the troops around the artificial intelligence initiatives that they have. But increasingly, we're seeing focus and clarity and progress amongst the Google team, and progress against where they need to be in terms of developing AI.
Paul wants to dive in here, but I'm going to, Paul, I'll go to you and you go to Andrew. Last night, the entire dinner was with afterthought about using AI for junior and high school papers.
Yeah,
I went ballistic.
I'd
like
be all
I had to
over
have
that.
another beverage of my choice. I mean, I'm sorry. This AI thing is permeating everything.
It's like
you got a physics quiz, AI.
Exactly. I mean, it was Cliff Notes back in the day, but now you can got it right on your fingertips, right on your phone. Andrew, on AI here, I guess one of my biggest questions is, as I hear about all these companies talk about AI, how much of that spending is incremental in the tech substack, if you will, versus kind of just switching it around maybe from IT or other areas of technology? Do you guys have a view of how much AI spending is incremental?
Well, that is the important question. And we do see subscriptions in the ballpark of $20 a month emerging as solutions that consumers want, right? For creating visuals and drafting emails and searching and collecting information faster. That $20 a month subscription is meaningful as AI habits and practices grow amongst consumers.
Andrew, what are you working on right now? Open question. You guys do such amazing research. What is the study of technology that Deepwater's looking at right now?
Well, we're spending a lot of time in the semi-cap space.
Interesting.
We own TSMC as an example, which is a beneficiary of almost all of these AI-related chips.
Well, I don't mean to interrupt, but this is too important. Lisa Mateo is asking me to do this. Taiwan Semi out with a pre-earnings report today. What does Taiwan Semi say about semis worldwide?
It says that demand continues to grow, and this is a trend that we see continuing. The AI boom is just getting started, and we're bullish on all the beneficiaries of AI. It's more than just hype.
Andrew, I promise your people called me while you were on, and I promise next time you won't have to appear with the goggles on. You can leave them in the drawer. Andrew, thank you. Thank you so much. With Deepwater Asset Management, Andrew Murphy joining us this morning. Paul, we got to start with a massive thank you.
Yep.
For our team. You know, we talk about blow up the show.
Yep.
I think we did twice today.
Absolutely. And the information warranted that, Tom, we had that inflation print that came in hotter than expected. And I think everybody across risk assets are kind of repricing everything from treasuries to stocks to mortgages to much across the board.
I'm making light conversation Monday about a 5% watch on a 2-year.
Yeah.
Boom. 4.95%. We're here.
We're here.
21 basis points. For those that aren't Global Wall Street, that's a ginormous move.
That's a ginormous move, and we're seeing it across the curve here. But again, on the 10-year Treasury, we were just talking to Ira Jersey earlier. He was saying keep an eye on 4.51%. That's a limit. That's a test on a technical side there. We're at 4.48%.
Euro yen not giving me much. Dollar yen, as you mentioned, rounded up at 153 is a stronger dollar against weaker Japanese yen. Excuse me, not much. I got a cough. Do you know I have a cough? Because I watched Shogun last night.
Oh, no, not again.
And Toranaga.
Yes?
He's got a cough.
Okay.
So it's like a sympathy cough. He's the star of the show.
Okay.
And so he's
I know you're all over that show.
And so I'm,
All right, we'll get through it. You only got to...
Can we talk about a great song?
Yeah.
This is the bravest rock song ever done.
Whoa.
It took 2.5 years to make. They blew it up through 3 producers, including Jim Steinman, who did Total Eclipse of the Heart.
Yep.
In the middle of it, their drummer had a horrific car accident and lost an arm.
Yep.
It's just the bravest song that Def Leppard got this song out. It was truly a miracle. What a great show. See you tomorrow.